Hello. Good morning, friends. Good morning. Can you hear me? Yes, okay. Audio, video, clear. Super. இன்னும் கொஞ்சம் பேர் வீடியோ ஆன் பண்ணீங்கன்னா ஏர்லி மார்னிங் ஆன் பண்ண மாட்டீங்க. ரெய்னி டைம், எக்ஸாம் டைம், டுமாரோ எக்ஸாம். ஸோ டுமாரோ 2 to 5 எக்ஸாம். ஸோ நமஸ்தே அரவிந்த். ரொம்ப நாள் ஆச்சு நமஸ்தே பார்த்துட்டு. So like school students don't expect anything. Flood will come, rain will come, exam will be postponed like that and all. No expectation. There were times like people have gone into examination hall half drowned, swimming and all. So that way institute cancellation is very remote, never will happen. So and this is like pretty small rain only from an institute perspective. So thereby do not have any expectation. So we'll have expectation from when this question may come, that's all. So even if it doesn't come also, it's okay, like that only we are just proceeding. Anyway, we are just proceeding into our today's session, accounting standard. The last examination it was 30 marks. The last examination group 1 usually 25 marks only it comes. We had 30 marks. The first question 4 into 5 20 marks, accounting standards. Question number 6, out of 5 questions we had 2 questions from accounting standards. So that way we had 4 plus 2 6 questions, 6 into 5 30 marks came from accounting standard. So similar trend we can be expecting, maybe 25 marks and 5 marks from framework, or 20 marks and 10 marks from framework. So framework is considered as a highly important topic for this coming examination. So let's now proceed further, my dear friends, into our discussion about accounting standard, revision on accounting standard, 30 marks coverage for your tomorrow's examination. Okay, my dear friends, in group 1 accounting. So today we are discussing about group 1 accounting. In that accounting standards 30 marks. Along with it we are also discussing the framework as a chapter, so which is module 1. Primarily it is module 1 discussion today. So we know, my dear friends, we have 8 accounting standards. We have 8 accounting standards in group 1. Like already mentioned in the previous class, AS 1, 2, 3, AS 10, 11, 12, AS 13 and 16. So these are the 8 standards we are having. Out of these 8 standards, AS 3, AS 11, AS 13 are getting also covered through chapters. AS 3 cash flow statement chapter, what we did there is entirely was based on AS 3. AS 11 foreign branch, but it is not foreign branch is exclusively the part of AS 11, or AS 11 is only foreign branch illa. AS 11 has got some additional requirement also. AS 13 we have already done, my dear friends. Okay, so these are the 3 standards. Anyway, let's focus on these things. So before this, again from the analysis, so in the question number 1, which was the mandatory question number 6 is not mandatory, question number 1 is mandatory. Then mandatory, my dear friends, in the December 2021 examination and May 2022 examination, so we had AS 1, AS 3, AS 11 and AS 13. We had these standards by December 2021 examination in the mandatory question, and thereby we were expecting. Similarly, when we conducted last revision classes, we told this is expected, AS 2, AS 10, AS 12, 16 expected, like that I told, and it came as it is. But that doesn't mean it should happen, like how Dhoni says that no. So in 2011 some biscuit was introduced. At that time we won World Cup. Now also we are relaunching that Oreo biscuit, and thereby we will get World Cup. Like that we can't compare always, but this is what normally we do. We make certain comparison and predictions and projections. So accordingly, so thereby we expect for the November 2022, again you can have expectation of these or at least out of this 3 standards will come in the mandatory questions. Okay, so it is like no 11 is definitely it is going to come in the mandatory question. 13. So then AS1 disclosure standard, my dear friends, if you carefully know, sometimes we feel that no, we are not understanding AS1. They are asking only disclosures part, no computations involved there, no technical aspects involved there. So few things that whether it is an accounting policy, change in accounting policy related disclosure, so like that they will be asking you, testing you, or they will give you a particular situation, they will ask you to tell, they will ask you make the required disclosure. That is what maximum you can get in AS1. So nothing beyond that, my dear friends. Anyway, so it will be like no AS1, 3, 11, 13 repeat, or maybe like no some small mix can happen in the November 2022. Anyway, so focusing from there, from that perspective, let's take up each of the standard, my dear friends. Okay, so first let me complete AS1, 3, 11, 13 from the reverse. So since we already done in the yesterday's class AS13, even prior to that all these standards will complete the framework aspect, will complete the framework part. Okay, so before even framework part also, you should be aware of one thing what we discussed in our classroom, the applicability of accounting standard to different enterprises. So in that, my dear friends, the latest amendment based question can come. So latest amendment based question, amendment. So originally, enterprises other than the corporate entities, so enterprises has been classified into 3 level 1 entities, level 2, level 3 entities and all. Now we have 4. So level 1, level 2, level 3, level 4, like that we have 4 different type of entities, my dear friends. So what are level 1, level 2, level 3? So for the purpose of applying accounting standard, what are we discussing presently now is that business enterprises, okay, we will tell so and so enterprises this standard applicable, so enterprises the standard is not applicable. That is called applicability. For that purpose, instead of classifying the business into jewelry business, automobile business, like that, we have classified based on the volume of business. That is what we are understanding as level 1, level 2, level 3 and level 4. Like that we have 4 different categories of business enterprises for the purpose of applicability of accounting standard. Okay, level 1 enterprises, my dear friends. What are level 1 enterprises? We have listed entities in the process of listing, because listing is not like no one day job, it might take 2 to 3 years time. Entities in the process of listing, banks, other financial institutions other than banks, insurance companies, all these things will come under level 1 enterprises. Apart from this, so those business enterprises whose turnover means sales, turnover exceeds 250 crores, will be coming under level 1 enterprises. Similarly, borrowings exceeding. So last examination, one of the examination, we found one question like this, my dear friends. One company was having sales of 225 crore and borrowing of this much. So will they want to apply exemptions applicable for these enterprises? Actually level 1 no exemption applicable. Appo you need to discuss this current provision. Then you should tell this company is having this much turnover, thereby it is so and so enterprise. If it is level 1 then it cannot have any exemption. Well, like that, first this particular provision, then the facts of the company, and then you should tell the company belongs to which category, then you should tell exemption is applicable or not. So why do you classify these categories? For certain enterprises, we have exemption from applying certain standards or certain part of the standard. Some enterprises are exempted entirely from few standards. Some enterprises are exempted from applying a part of the standard. Whether the exemption applicable or not, for that only we classify these enterprises. So in the 4th new category, came late. Usually we call it as small and medium entities and all. So SME or SMCs, small and medium companies or small and medium entities. So now it is slightly refined as micro, small and medium entities, MSME. So micro, small and medium entities. So like that we have a classification. So for that only we have now 4 categories. Anyway, borrowings exceeding anytime. So there is a word called anytime. So thereby borrowings, no. So at the balance sheet date, it is this much only, but during the year this much. So borrowings at any time exceeding, my dear friends, 50 crores. Borrowings exceeding 50 crores. So similarly, they may also test based on this, my dear friends, holding and subsidiary of above entities. So which means, so one entity does not fit into any of those conditions, but I am a subsidiary. 5 crore the sales, very small company. So 5 crore the sales. So still I may have to be coming under level 1 enterprises because I am a subsidiary. These are all level 1 enterprises, my dear friends. Okay. So level 2 enterprises, So level 2 enterprises, my dear friends, it is first of all other than level 1. So those enterprises whose turnover exceeds 50 crore, but not exceeding 250 crores. So whose turnover exceeds 50 crore but not exceeding 250 crores. Similarly, my dear friends, borrowings exceeding 10 crore, not exceeding 50 crores, Similarly, we also have holding and subsidiary of above companies will also come into level 2 enterprises. But sometimes they will give you maybe some 7 to 8 companies or 7 to 8 business enterprises, not necessarily being companies. They will give sales, borrowings of these companies and all. They will ask you to classify them into the different levels of enterprises. So you should be knowing, or sometimes they will give you a case study type. It belongs to so and so category. Can they avail exemption, etc. So like that, or case study. So you should be aware in any form. Sometimes directly only they will ask you what are the conditions for level 1, level 2, level 3. Like that they may ask you any of the question may be in any form, but you know the concept, you can answer that particular question. Like that you should be understanding. So then, prior to the previous examination RTP, we had a question. One of the institution was a charitable institution. So when it is charitable institution, it doesn't do any industrial, commercial, business activities. About whether the accounting standard is applicable or not was the question. So first of all, we understand when there is no industrial business motive, profit motive related activities happening, my dear friends, primarily standards are not applicable. Suppose a religious trust receiving donation, paying donation and the trust, religious trust, charitable trust, it is not applicable. But if they are carrying on some portion commercial activity or business activity, if they are carrying on, they are having a small canteen, sir, school there is a canteen, sir, then they have to apply accounting standard not only for that particular part, then the entire institution, for all transaction standard is applicable. Like that answer is beautifully given in the RTP. So on the I feel that you should have covered at least 3-4 RTPs in that one question. Is about applicability of standards. Sometimes they will bring out a surprise, my dear friends. So today it is not chapter based. So this module 1 basic questions only we are focusing, my dear friends. Okay. So this is level 2 enterprises. So turnover exceeding 50 crore, not exceeding 250 and 10 to 50 crores. Level 3, my dear friends, turnover, it is between 10 crore to 50 crores. Turnover, it is 10 crore to 50 crores. And borrowings, my dear friends, borrowings, it is 2 crore to 10 crore. 2 crore to 10 crore. This is what level 3 enterprises. So which means those enterprises whose borrowings exceeded 2 crore, not exceeding 10 crore. Like that we are understanding, my dear friends. Also we have holding and subsidiary of aforesaid companies. So like that we should understand. You should never get a confusion. Sir, I am being a subsidiary, I am coming under level 3, but into some other basis I am coming as level 2 na. So first of all, level 3 is applicable only other than level 1 and level 2. So if you already fit into higher category na, you will not come into lower category by satisfying any of the conditions that you should be knowing. So other than level 1, 2 and 3, no conditions only. Level 4 na, it is other than level level 1, level 2, level 3, level 1, level 2, level 3. No sales condition, no borrowings condition for level 4 enterprises. So my dear friends, so these are all large business entities, This is level 2 enterprises, medium business entity, level 3 is small, and level 4 is micro. And these level 2, level 3, level 4 is what we call it as MSME. So medium, small, micro, medium and small entities, my dear friends, all of you. So micro, small and medium entities, micro, small and medium entities, like this, level 2, level 3, 4, level 4 together called as MSMEs, all of you. Anyway, so this is what level 1, 2, 3, 4. If it is corporate entities, then only two categories, my dear friends. So it is called non-SMCs, and the SMC, small and medium sized companies. So here what we understanding now, non-SMCs. So non-SMCs other than small and medium sized companies. So which means this particular level 1 conditions, that alone is the basis for classifying into two categories. So those fitting into level 1 enterprises will be considered as non-SMCs, and those fitting into level 2, level 3, level 4 are called as SMCs. This is a corporate classification as per the standards issued by the central government. As per the standards issued by ICAI, this level 1, level 2, level 3, level 4 categories. Hope you are understanding the classification requirement, my dear friends, all of you. Appo companies பொறுத்தவரை ரெண்டு classification, SMC, non-SMC. level 1, அதுக்கப்புறம் other things, all other things, no level 2, 3, 4 concept and all is what we should understand. This is the classification part. So that problem involving the religious trust, charitable trust applicability, so that also you should be understanding. So with that, the applicability is over. We are going to next part, because this is very given as highlighted version in the RTP. So this amendment is applicable for the examination like that and all. So who knows, suddenly a question can come from that particular area. So framework is a unit number 2 or chapter number 2 in module number 1. Framework for preparation and presentation of financial statements. Either 20 minutes we will take, my dear friends. Framework for preparation and presentation of financial statements. Framework for preparation and presentation of financial statements. Okay, so level 2 ke edha exemption unda, exemption illama there is no need for level 2 no pa. So first of all, see, I don't want to give partial exemptions relating to each of the standards, but you should know certain disclosure standards applicable only for level 1 enterprises. Level 1 all standards applicable, which means certain disclosure standards not applicable for 2, 3, 4. So where we had this cash flow statement, segment reporting, earnings per share computation, these are all disclosure standard. So consolidation, so which you don't have in our syllabus, AS 21, 23, 27, like that we have exclusive disclosure standards is not applicable for 2, 3, 4. So all the three cannot applicable. Now why there is distinction? In 2, 3, 4 based so from some standard partial exemption given, some disclosure based exemption given, that level you need not be learning, Jivanandam. Okay, so examination போறதுக்கு முன்னாடி word by word, thread by word analysis, it is not possible. Proceeding. Framework for preparation and presentation of financial statement. Discuss it for some 4 hours and all. We'll complete now in 20 minutes time. So what is framework? Meaning blah 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 blah. Okay, so framework will be assisting in. So this is a document that has been prepared by the ASB. So this will be assisting different people, my dear friends, who are preparing financial statements. So whenever they have confusions, then they will be referring about this framework. So they have to prepare financial statement in accordance with accounting standard. So similarly, the preparers of financial statement is accounting or preparing financial statement dealing items that are not covered by any of the standards. So that time also they will be using this framework. Then it will assist the users to interpret, auditors to form an opinion. It will help the ASB itself to formulate news channel like that and all. We discussed various need for the framework, objectives of the framework or the need for the framework. So just remember, and if the question comes 2, 3, 4 points, it helps the auditors, users, preparers of financial statements, then ASB, then those interested in the work of ASB, like that we have different uses. Anyway, now framework says that financial statement consists of balance sheet showing the financial position. This is 11th standard topic. I told financial position. P&L shows the financial performance, financial position, financial performance, that is profit or loss, cash flow statement, also notes. So like that we understand what exactly constitute financial statements. Then we told that financial statement is not prepared for the benefit of the entity which is preparing financial statement. It is actually prepared for many users, many external users. Like that we discussed so many external users. We call it C2I, creditors, suppliers, customers, employees, financiers, investors, shareholders, governments, like that. There are so many people who will be using the financial statement. So just aware of, if this question comes, you should be writing it. So you should not be ignoring it as considering it as vague and all, because you will not lose marks. Okay. Now, so core areas, some special areas, my dear friends. So first it says about like AS1 liyum seri, idhiliyum seri, it is repeated topic. It's a common topic. What is it na? The fundamental accounting assumptions. So here it just lists out a fundamental accounting assumption. In AS1, disclosure relating to fundamental accounting assumption. Like that we understand. So what are fundamental accounting assumption? GCA, going concern, consistency, accrual. So this is the place where we told, my dear friends, it base panni you should be solving this problem based on going concern. I hope you would have referred the problem from the RTP, going concern related problem. Suppose, my dear friends, plant and machinery. So by 1/4/2021, book value is 8 lakhs. So we understand, my dear friends, useful life remaining, it is 8 years. Useful life remaining 8 years. So then we find that the expected realizable value as at 31st March 2022 is 6,50,000. It is 6,50,000. In that case, in the balance sheet by 31st March 22, if there is going concern, no going concern, what will be the value of this plant and machinery? So what is the basic concept of going concern? It's an assumption business will exist in foreseeable future. If the assumption is continued to hold good, we'll apply the relevant accounting standards. All the accounting standards will follow various accounting assumptions, etc. But if there is no going concern, very simple. That rule alone you should remember. All assets should be realized at or recognized at expected net realizable values. Liability should be recognized at expected settlement value. These points you should remember. All the assets should be shown at expected realizable value. So for plant and machinery, if there is going concern, 8 lakhs minus 1 lakh depreciation, it is 7 lakhs. No going concern, it should be shown at 6,50,000. Accordingly, in P&L, my dear friends, if there is going concern, no going concern, depreciation will be 1 lakh, 1.5 lakhs. Like that, you should be knowing both balance sheet effect and the P&L effect. Understood? So in the RTP, they were asking you based on no going concern. Sometimes they will ask you to do both going concern as well as no going concern. Understood? So similarly, in the balance sheet opening date, you have deferred expenditures. So this deferred expenditure will have meaning, because what is deferred expenditure? Expenditure already incurred, but we believe it is related to various years. So we are amortizing the expenditure. But if there is no going concern, then there is no concept of amortizing. Entire expenditure should have been charged in the P&L. Similarly, they have given one debtors example. Debtors, it is given as 8 lakhs. Doubtful 10,000 rupees. Doubtful, it is 10,000. எல்லாமே 8 lakhs, 6 lakhs. Now full 10,000. Then another 30,000 is collectible only on the successful installation of a product in the future. Successful installation of product in the future. Appo, if there is going concern na, you will show 6 lakhs minus 10,000, 5,90,000. If there is no going concern na, then future illa, where is the question of successful installation? So thereby 6 lakhs minus 40,000, you will show 5,60,000. Hope you are understanding this, all of you. Going concern illa, you are supposed to show an expected net realizable values. Now you have closing stock, my dear friends. Closing stock, cost to price, it is 3 lakhs. NRV 3,50,000. NRV 3,50,000. If you have going concern, you will show at what price? If you have going concern, you will show closing stock in the balance sheet at how much abdina? It will be shown at 3 lakhs. Very good. If you don't have going concern, will you show at 3,50,000, which is more than cost price? More than cost price, you will show abdina? Yes. So here there is no question of gain or loss, my dear friends. So you should show all the assets at the net realizable values. Going concern illana, you should be showing at net realizable value, is what we are understanding. Suppose you will be showing at 3,50,000. You won't apply the principle of cost or NRV, whichever is lower. Understood? Okay. So that point you should be knowing, my dear friends. Similarly, there is a loan, my dear friends, to the extent of say 15 lakhs. There is a prepayment penalty applicable at 8%. Prepayment penalty applicable at 8%. In that case, my dear friends, if there is going concern, this penalty and all should not be considered. But if there is no going concern, which means you have to close the loan immediately. So which means where you committed originally, it will be paid after 5 years. Now it's you are going to pay now, then this penalty is made applicable. So expected settlement value will be 15 lakhs plus 8% of this. About total loan will be 15 plus 8%, 16 lakh 20,000, and 1 lakh 20,000 will be shown as a loss. Like this, the entire RTP problem adjustment I have already completed here. So full pledged structure, you please go through that particular problem, my dear friends. This is one area. Similarly, we are discussing a part, discussing the fundamental accounting assumption. That going concern related aspect is what we are discussing. The basic problem is what we are discussing. Then consistency means whatever followed in the previous year should be followed even the subsequent year also. Understood? Next we have, my dear friends, accrual. Accrual based on one examination it came, or RTP came, I don't know. Examination RTP theriyala. Accrual concept. Though we have discussed in the classroom, one more time we are recalling it, my dear friends. So as far as accrual is concerned, is income should be accounted as and when they are earned, not when they are received. Expense should be accounted as and when they are incurred, not when they are paid. There is a cash concept, a complementary to this accrual method of accounting is cash method of accounting. So they were actually demonstrating or asking you show the difference between accrual method and cash method by a problem. They gave directly a problem. So what is the problem na? J limited. So in year 1 purchased goods, year limited, in year 1 purchased goods. For cash it is 4 lakhs. For credit it is 12 lakhs. Then it is made sales also, sales. For cash they have sold goods for 9 lakhs. For credit they have sold for, it is 14 lakhs. Like that the sales happen, my dear friends. J limited, year 1 purchases on cash and credit, all the goods are sold, no closing stock. No closing stock, my dear friends. Okay, so they are asking you profit or loss of J limited if they follow accrual basis, if they follow cash method, if they follow cash method. Like that they were asking, my dear friends. So or 4-mark question, 5-mark question like this. About what we should do under accrual method? Under accrual method it is very simple. Year 1, as far as accrual method is concerned, so profit and loss is that sales, all the goods purchased has been sold, no, sales, whether it is money received or not, sales is 23 lakhs, purchases it is 16 lakhs, so profit is 7 lakhs. Very, very good. So profit is 7 lakhs. This is accrual method. This is accrual method. Next, cash method. As far as cash method is concerned, my dear friends, year 1 P&L will show whether goods is sold or not, doesn't matter. Money how much received, money how much paid, that is the cash concept. So thereby sales, it is been understood as 9 lakhs. Sales, it is 9 lakhs, and purchases, we are understanding that as 4 lakhs. Purchases, it is 4 lakhs. Our profit, my dear friends, it is 5 lakhs. Then we have year 2. Year 2. As far as year 2 is concerned, so we presume that whatever we sold on credit will be received in the subsequent period. So thereby, so they want you to present like this. So sales will be, it was 14 lakhs and purchases was 12 lakhs and profit is 2 lakhs. So this was the cash method. So we are just explaining the difference between cash method and accrual method. So for this question has been given. So this is how you will be presenting the P&L account. So accrual ku oru P&L da. For cash method ku we are presenting 2 P&L. So we will account only when cash is received and paid. So based on this, one question had come. So at that time we should not bring easiest area. We should not be leaving out, my dear friends. Okay. So that way the fundamental assumptions over. Next to what we had now, we had elements of financial statements. Elements of financial statements. So before this we had, my dear friends, characteristics of financial statements. So we already told you financial statement. So what is a character? Very simple, but it is providing information. It is a form of communication. So our communication should be what? Whatever I am speaking now should be understandable. It is not merely understandable, it should be relevant to us, sir. Today, before examination, if you come and discuss the story of some movie, Sardar and all, na, or about some IPL, na, then it will be absolutely nonsense. No. So, Pakistan match, today if I discuss, na, it is not at all relevant to you. So, it should be relevant. Accounting standard, na, I should be discussing. It should be reliable. I should not be teaching you some wrong things here. It should be reliable. And it should be comparable also. It should be comparable. So, classroom order, it should be comparable. I should not be telling absolutely new things which is not I taught in the classroom. So, like that, 4 things, my dear friends, understandable. So, sometimes they will ask you. So, you should, after writing heading, you should write 2 lines about that. So, like that, you can fetch the 5 marks, my dear friends. Characteristics of financial statements: understandable, relevant, reliable, comparable. Like that we understand. Anyway, once that is completed, we discuss elements of financial statements: asset, liability, income, expense. So a question used to come from this area also, my dear friends: asset, liability, income, expense. So asset is a resource controlled by the business enterprise as a result of past event from which future economic benefits are expected to flow to the entity. Or resource controllability should be there. You know what is controllability? What is the controllability? Sir, I should be having the right to receive economic benefits. I should also have the right to restrict others to get such benefits. That is what controllability. Like that we discussed. Liability, present obligation as a result of past event which will result in outflow of economic resources. Like that we have defined asset liability. Adu okay, but no problem. So which is also covered through different other standards. Income expense related discussion, my dear friends. What is income now? What is the definition of income? Means it is increase in economic benefits. Increase in economic benefits arising in the form of inflows, cash inflows, arising in the form of inflows, increase in the value of asset or decrease in the value of liabilities. So increase in economic benefit during a particular period arising in any of these 3 means, either in the form of various cash flows or just the value of asset increases or value of liability decreases. Adukapur condition number 1, this is first condition, that this is any of these things happening, it should increase equity, increase equity, increase equity. That's condition number 2. Then condition number 3 is that, my dear friends, it should not be a contribution from equity participant. It should not be other than contribution from equity participant, equity participant. Like that we should be understanding, my dear friends. So other than contribution from equity participant. So when you take a transaction, for example, my dear friends, it has been given like this: assets, liabilities. So equity, the term equity, no, that is nothing but capital, my dear friends. Asset minus liability is equity. So we have opening balance 20 lakhs, liability 8 lakhs, equity it is 12 lakhs. Now what happened is that I received cash from say debtors. I received cash from debtors 1 lakh. What is happening abdina? So there is no change happening here. There is a transaction is happening, but assets la no change. Cash received from debtors. Assets la no change. Liability no change. Hope you are understanding this. Here it is an inflow but does not make any changes. It is not income. It is an inflow. It is a transaction. It's an inflow, but it does not make any change, my dear friends. All of you. Sorry. Similarly, creditors are paid cash by 1 lakh. Creditors are paid cash by 1 lakh. What happens? Other outflow. So that is having a different discussion. Anyway, that we will take it later. Now we'll take it as contribution of share capital by the owners. Contribution of capital by the owners. In that case, what happens now? There is an inflow. Contribution of cash by the contribution of cash by the owners. Like that we are understanding, my dear friends. In that case, what happens now? Say they are bringing 2 lakhs. So liability doesn't change because that is not liability, that is equity. No. Suppose asset becomes 22 lakhs, liability is still 8 lakhs, equity is 14 lakhs. Now what happens? Condition 1 satisfied. What is condition number 1? Inflow. Satisfied. Next condition what? Is it increasing equity? Yes sir, equity is increased sir. Number 2. Number 3, it should be a transaction other than contribution from equity participant. No sir, it is contribution from equity participant. In that case, that is not income. So thereby contribution of face value of shares, contribution of securities premium, both are not income, my dear friends. Even securities premium cannot be fit into the definition of income. Like that, they will give you some transactions by giving opening balance of asset, liability, equity. What sort of question expected, sir? Very simple. They will give this. They will give 2-3 transactions. Commission received. Commission received. So commission received. So received 50,000. So asset changed 22 lakh 50,000. Liability did not change. So it is 8 lakhs. So 14 lakh 50,000. Now you should analyze that there was an inflow. Increasing equity. That inflow is not from equity participant. Thereby it is income. Like that you should be in a position to give reasoning. So like that 2-3 transactions. Okay? If you can give reasoning, then you will be getting 5 marks, my dear friends. Income definition or 3 conditions. You should be in a position to analyze. There should be an inflow. Number 1. Number 2. It should increase the equity. It should increase the equity. And it should not be a contribution from equity participant. The same way we have expense also. It should be an outflow or decrease in the value of asset or increase in the value of liability. Number 1. Condition 2 is that it should reduce equity. Reduce equity. Number 3. It should not be not distribution to owners. Not distribution to owners. What happens now? Asset, liability, equity 20 lakhs and it is like 8 lakhs. It is 12 lakhs. You are paying dividend. So question is asking you whether it is an expense as per the framework. Analyze. Like that they are telling. What we do? Dividend paid 3 lakhs. So asset becomes 17 lakhs. Liability is 8 lakhs. It is 9 lakhs. It is an outflow. Yes, one condition satisfied. Is it reducing equity? Yes. And the condition satisfied. 2 conditions satisfied. It is expense. No, because it is distribution to owners will never be accounted as an expense. So 3rd condition not satisfied. All the 3 conditions should be satisfied to be classified as an expense. This base funny. So simple analysis, though I am discussing in a complex manner, it's a simple analysis, my dear friends. The 3 conditions should be kept in your mind and accordingly you should analyze and you should be telling it's not income. We know dividend, salary paid is expense. Machinery purchase not an expense. We know, but it should be analyzed from the definition of framework. to tell whether it is income or expense, my dear friends. So this is elements of financial statements. Then you have questions based on measurement basis. You have questions based on measurement basis. You have historical cost, current cost, realizable value, present value. Like that we have 4 measurement basis, my dear friends, for measuring assets and liability. Original cost we understanding as historical cost. Current cost na current market price. Current selling price is realizable value, and discounted value of future economic benefit is present value. So like that we understand. Appo I have a machinery originally purchased for 50 lakhs. After 3 years, today market prices, it is 80 lakhs. But we can sell, expected realizable value is 54 lakhs. How come, sir? After 3 years, you are selling for more than cost. Because market la 80 lakhs pa. Market la 80 na. So today, estimated realizable value is 54 lakhs. I can sell. So then, this machinery I can use for next 10 years and it can generate a profit of rupees, say some 12 lakhs per annum for 10 years. Then what we should do now, using appropriate discount factor, that has to be discounted. The discounted value of 12 lakhs for a period of 10 years now will be called as present value. Like that we have 4 measurement bases. So this 50 lakhs is called historical cost. Today if I want to buy again, how much I should pay? Current cost. Today if I sell, how much I will get? I won't get market price. This is old asset pa. Old asset I'll fetch some value. So based on its current condition, it is called realizable value. Based on future benefit, discounted is called present value. Hope you're understanding. So finally, concept of capital maintenance. இதுவும் கொஞ்சம் கன்ஃபியூசிங் ஏரியாவா இருந்தது. சும்மா ஒரு தடவை டிஸ்கஸ் பண்ணிடலாம் குயிக்கா. ஸோ கான்செப்ட் ஆஃப் capital maintenance ரொம்ப simple. There are 3 concepts of capital maintenance, my dear friends. Financial capital maintenance at historical cost, financial capital maintenance at current cost, physical capital maintenance at current cost. Like that we have 3 concepts of capital maintenance. So what does this concept say? This concept says that whatever capital you had at the beginning should be maintained at the end also. In other words, they are telling, they are indirectly placing a restriction on your drawings. So that only after ensuring some minimum capital at the end, balance only you can withdraw to home for your personal needs. Then only business is maintained. What is the basic understanding now, my dear friends? It is like this. So you know, normally profit or loss is equal to what? The profit or loss is equal to closing capital at drawings minus additional capital minus opening capital. This is what we are understanding as profit or loss. Understood? Sorry, if you take one item alone to the other side, it is profit or loss minus drawings. What is this? This is the total profit. Adala minus drawings, na drawings against profit. So this is nothing but retained profit. Which is equal to closing capital minus addition of opening plus additional capital. Hope you are following this. Closing capital minus what you have invested at the opening and additions during the year. The difference is nothing but retained profit. Like that we are understanding. Now this is what all these 3 capital maintenance concept taking. So what we are understanding is that closing capital, say it is 8 lakhs. So opening capital, so current year profit, no. So current year profit, I am not showing here. Okay, so opening capital, say it is 6 lakhs. Appo additional capital, if it is given, that also should be considered for deduction here. So difference is 2 lakhs. So what does this 2 lakhs represent? This 2 lakhs represent dash. Two lakhs represent retained profit. Very, very good, very good. Retained profit, my dear friends. So Santosh ji, super. So retained profit. 2 lakhs represent, it is nothing but retained profit. இப்போ நம்ம அதை explain பண்ணியிருக்கோம். So closing capital minus additional capital plus opening capital will give you retained profit. All of you. Okay, so this retained profit is given, my dear friends. So this retained profit, according to the capital maintenance concept, it says that it should be either nil or positive. If it is nil or positive, it means the business have maintained adequate capital. Otherwise, you make a comment. If this is negative, your comment is the business have not maintained adequate capital. This much only you should be knowing. You are actually comparing closing capital and opening capital. Opening with addition if it is given. So the difference is nothing but retained profit. Retained profit, if it's nil or positive, it means your comment is that yes, business have maintained sufficient capital to ensure the level of business is not declining. We are not telling it is growing and all, it is not declining. That is what we are explaining. Hope you are understanding this. Our capital maintenance concept says that. Ramachandra irkingla? So screen and tali. Very good, super. So retained profit is nothing but this retained profit should be nil or positive. Ipo, along with this, some extra information will be added. Suppose drawings was some already given. Drawings is 80,000. Drawings is 80,000. How much more the businessman can draw? How much more the businessman can draw? How much more the businessman can draw? Businessman can draw maximum of 2 lakhs to ensure the capital is adequately maintained. Let me give another example. This is easy. 2 lakhs is surplus, 2 lakhs is to be the maximum drawings. Additionally, so maximum total drawings will be 2,80,000. Additional drawings will be 2 lakhs. Hope you are understanding. Our total drawings can be 2,80,000. If the question is, what should have been the total drawings to maintain the adequate capital? Answer is 2,80,000. Hope you are following this. Everybody say, suppose I am telling like this, my dear friends. It is opening capital. Opening capital, it is 7 lakhs. Closing capital. Closing capital, it is say 5,80,000. Closing capital, it is 5,80,000. Drawings already made. Drawings already made is 1,50,000. Drawings already made 1,50,000. All of you say, the question is asking you that what should be the maximum amount of drawings that should have been made? What should have been the amount of drawings that should have been made to maintain adequate capital? To maintain adequate capital. Like this question arose now, what you will do? So what should have been the maximum amount of drawings to maintain adequate capital? So for that, my dear friends, so closing capital, it is 5,80,000. Opening capital, it is 7 lakhs. So this is 1,20,000. So this is negative, which means this 1,20,000 represent what? The amount excessively drawn. The amount excessively drawn. All of you. What is the original drawings? Original drawing is 5 lakhs. They will give you so many components of question. What is the excessive drawing? What should have been the drawing to ensure adequate capital, like that and all. But this 1,20,000 represent excessive drawings. How much actual drawings? 1,50,000. What should have been the actual drawings to maintain adequate capital? Very, very simple. He should have drawn, this is excess, no? So he should have drawn only 30,000. If you had drawn 30,000, then the capital would have been adequate. Like that, you should make a comment. All of you, this is a point. This is comment section. Now, computation, this particular 3 methods. Sir, what is the difference between these 3 methods? My dear friends, under financial capital maintenance at historical cost, we are telling, suppose closing capital, some amount is already there, 8 lakhs. Opening capital was there as 6 lakhs. Take that 6 lakhs as it is. Opening capital 6 lakhs. This is historical cost. Now you will appreciate the other two methods or this method itself only after understanding other methods. Financial capital at current cost means what na? Sir, on the date 6 lakhs, comparing now, see, telling that now your closing capital should be at least equal to 6 lakhs is not fair, sir, because the purchasing power at the opening and purchasing power at the closing are not same. Thereby, your closing capital should be compared with adjusted opening capital. Inflation adjusted opening capital, that's all. So, if the question is also giving you index, my dear friends, opening index 100, closing index say 130. So then like this index given, your comparison should be closing capital amount is given 8 lakhs, opening amount is given as 6 lakhs. But what you should consider is not the actual opening capital. If you take actual opening capital, that is very historical cost. If you restate the opening capital using the index, then it becomes a financial capital at current cost. What you should have compared is that even though opening capital given the question is 6 lakhs, I will take 6 lakhs divided by 100 into 130, it is 7,80,000, and we tell 20,000 is the retained profit. Even though the historical real retained profit is something different, we tell this is what retained profit. Hope you are following this, everybody. Index given and the opening capital should be restated using the index. Sorry. What is physical capital maintenance at historical, at current cost? Same index application. Closing capital 8 lakhs. Same index application. Only thing is, here we applied general or average index, but here we apply specific index. So this opening capital 6 lakhs you told no. This opening capital you told it is 6 lakhs, sir, which comprises of assets minus liabilities. Adala you have machinery, you have stock, you have debtors, liability, creditors, loan. That way only you got 6 lakhs. Now when you apply the index, you apply the price index applicable to each of the assets separately. So when you apply specific index, then that is called physical capital application, and when you apply general index, then that is called financial capital at current purchasing power. Ivaladan difference. Hope you are following this. So study model question you will not be understanding difference between these two because they have given under capital only one item, which is stock. So thereby here also they have given average index, but here they have specifically mentioned in the question that it is stock or index, but there are no 2-3 items. So you will be not in a position to understand what exactly is the difference. Here they are given general index and here they would have given stock price index. So since we have only one item, we are supposed to apply specific index. So stock or index we use there. Hope you are understanding this, all of you. Okay, so please understand that particular problem accordingly. Also may understand how to make comment about it. So finally, closing minus, sir, so many things you told confusing, sir. Sorry, last minute confuse la panla. Closing capital minus adjusted opening capital is called retained profit. This retained profit is positive or it is nil na, the business have maintained adequate capital. If it is negative na, the business have not maintained adequate capital. The negative amount represent excessive drawings. This much only you should be in a position to understand. Hope you are following this. Okay. So this framework, my dear friends, is all over. So on the applicability of standard framework has been completed. You are proceeding into standards, my dear friends. Okay. Reverse length. Reverse length, complete reverse length. A16 borrowing cost. So many blah 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 things discussed, no sir. The borrowing cost, what exactly we understand, sir? Borrowing cost order. Capitalization rules, my dear friends. Capitalization rules. Though in the last examination question came, so capitalization rules. So or capitalization quantum. Capitalization quantum. So if it is specific borrowings, na actual borrowing cost minus temporary investment income is what we should be capitalizing. So for constructing one building or installing a machinery, I took a loan exclusively for that purpose. It's called specific borrowings. I already have 2-3 borrowings, sir. Use these funds for various purposes. Adula or particular purpose is this, na, that is called general borrowings. Not directly exclusively taken for so and so purpose. General borrowings. So in case of general borrowings, my dear friends, we will be using something called the capitalization rate. Capitalization rate, which is nothing but weighted average cost of borrowings. Weighted average cost of borrowing. Total borrowing cost divided by total borrowings into 100. Total borrowing cost divided by total borrowings into 100. So like this one problem area, but last time it has been tested, my dear friends. Few other things that can be tested is case study type question. Sir, a particular company in the process of creating a qualifying asset, has borrowed so and so amount. Borrowing cost incurred, it is 40 lakhs. Now they are giving that the borrowing cost attributable until the asset is ready for use. Until the asset is ready for use, so and so amount, and the remaining is attributable to the period till it is put to use. So they give different information like this: ready to use information, put to use information. Now you should know borrowing cost can be capitalized only till the asset is ready to use and not till the asset is put to use. So remaining borrowing cost has to be expense, even though asset was not in use, but once it is ready for use, then you should stop the capitalization of borrowing cost. So like that case, as per AS16, borrowing cost can be capitalized only till the asset is ready to use, not when it is put to use. So in the given case, the asset was ready for use and so date. Our borrowing cost related to that period is this much only. So thereby this much only can be capitalized. Like that you should provide the answer, my dear friends. All of you. Okay. So similarly, my dear friends, they have given in the previous RTP, not the latest RTP, the previous RTP, they have given some questions like this, my dear friends. The question relating to borrowing cost is like this. It is capitalization, that is machinery was already installed, but another 2 months they have taken, for the purpose of actual usage, during which trial run was conducted. During period, trial run was conducted. Apo, in the installation is already over, up to that particular period, borrowing cost was 30 lakhs. 2 months extra borrowing cost 5 lakhs. So whether this 2 months borrowing cost can be capitalized, so if the trial run is not conducted, so then we can say still the asset is not ready for the intended use. It is not ready for the intended use. The production of starting of commercial production have not started. So thereby 2 months interest also can be capitalized. But during the marketing stage, suppose it is already ready, but still we are into the marketing stage, that time borrowing cost should not be capitalized. These are all the latest, the last two RTP questions based on AS16. All of you. Then in one of the question, they have given, my dear friends. So there are different phases of expenditure they are incurring on a particular bigger project. Phase 1, phase 2, phase 3, phase 4. Expenditure incurred was like this. Say total amount. They have given 1, 2, 3 in different amounts. I am just giving the total amount: 80 lakhs, 100 lakhs, 150 lakhs, 250, 330 and 170 lakhs. So 500 lakhs. This is like phase 1, phase 2, phase 3, phase 4 of the different projects, my dear friends. All of you, they are giving, my dear friends, total borrowing 400 lakhs. Borrowing cost, it is 15%. Borrowing cost 15%. Like this information given. They are also telling phase 1 and phase 2 was already operational. Phase 1 and phase 2 already operational by mid. So what is the treatment of borrowing cost? Very simple, my dear friends. Phase 1 and phase 2, all these 4 phases are qualifying as already mentioned. Phase 1, phase 2 already operational by midday. So what is the borrowing cost to be capitalized? What we should do? It is very simple, my dear friends. First, borrowing cost is 400 lakhs into 15%. Even though our spending is 500 lakhs, but borrowing cost, what you should find out, you only actual cost incurred. So actual cost incurred only can be apportioned. It is 60 lakhs. Thus this is the borrowing cost actually incurred. Now this will be apportioned to phase 1, phase 2, phase 3, phase 4 in the proportion of total expenditure. In the proportion of total expenditure, first apportion 400 lakhs in the proportion of this expenditure. All of you, once you identify the borrowing cost, then treatment. What is the treatment abdina? So in phase 1 and in phase 2, 6 months capitalize, 6 months expense. Phase 3 and phase 4, entire 12 months capitalize. Like that you should provide a treatment, my dear friends, treatment of borrowing cost. This is also the latest RTP question based on this borrowing cost A16. All of you. Okay, you should be knowing only till the asset is ready for use, the borrowing cost can be capitalized. It should be relating to qualifying asset. Then the treatment of, if it is specific borrowing cost and if any temporary investment income given, that should be deducted. That also you should be knowing, my dear friends. All of you. Okay, so AS 13. We have already done this AS 13, my dear friends. So in AS 13, maybe a question from reclassification. Last examination, before that we had the question from valuation and classification. There could be a question from reclassification. You know the principle, current to long term investment reclassification is happening. They are giving cost 8 lakhs, cost 8 lakhs. Now carrying amount, my dear friends, it is given as 7 lakhs. Carrying amount is 7 lakhs. Then fair value, my dear friends, it is given as 7 lakh 60,000. 7 lakh 60,000. What is the transfer value? What is the transfer value? Like that the question. So in case of current to long term, what is the transfer value? Very good, my dear friends. What is the transfer value? When current is reclassified, it is only cost and fair value to be considered, not the present carrying amount. Carrying amount of book value not to be considered. So thereby we should take 7 lakh 60,000. 7 lakh 60,000. All of you. Okay, sorry. In the books you are having carrying amount as 7 lakhs, no, and you are showing at 7 lakh 60,000. What is the treatment of this difference? Difference of 60,000 will be credited in P&L. Suppose they will ask you what is the treatment of the difference, not merely transfer value. If they ask you treatment, then you will provide a treatment also, my dear friends, because in the books it is a 7 lakhs. You can't simply write, oh, it will be shown at 760. That's okay. What will happen to the overall accounts? Not only investment is increased, corresponding a 60,000 should be credited in P&L. That point also should be knowing, all of you. Okay, long-term investment into current investments. So in that case, it has been given cost 20 lakhs. Carrying amount, it is 17 lakhs. Carrying amount 17 lakhs. So fair value, my dear friends, fair value, it is 16 lakhs. Fair value, it is 16 lakhs. What should be the value at which we should be transferring? What is the transfer value? So there we will take lower of cost and carrying amount. So thereby it should be reclassified at 17 lakhs. So what is the difference treatment? How much? How much difference should be taken to where? Here no difference, because carrying amount is 17 lakhs transferred at 17 lakhs. So no difference, my dear. Okay, so Balaji, so just give an acknowledgement. So this is the reclassification rules. All other things you already covered, my dear friends. So if the question is FIFO weighted average, you should know how to apply that. So the AS13 in the last class we have taken in detail. So reclassification based, I felt there could be a possibility, so I am discussing it. Shall we proceed? All of you. AS12, accounting for government grant. My dear friends, primarily standard deals with accounting treatment for receipt of grant, accounting treatment for refund of grant, accounting treatment for receipt of grant, accounting treatment for refund of grant. Now, my dear friends, when you receive government grant, it can be in the nature of promoter's contribution. In the nature of promoter's contribution. In the the government is giving us grant for purchase of asset, which could be non-depreciable asset, depreciable asset. Government is giving some grant for services. Government is giving grant for services. it is for past service, it is for future service. Like that we are understanding. Government is giving money. Now government is giving some asset. Now these are all called monetary grant, which means here government is giving me money. Now government sometimes will give me directly some assets. We call it as non-monetary grant. Non-monetary. And then government can give this at a concessional value, at concession or at free. Government is giving me solar plant at a concessional value. Government is giving me solar plant free of cost. Like that, there are two possibilities. Say, first focus is government is giving money, cost duddu money. So government is giving money in the nature of promoters contribution. What is this? To establish a new venture, new unit, new business, money should be brought by owners called promoters. Promoters, now owners, the ultimate originators of the business. They only should bring money for further units, business, division creations. But government says, since you are starting business at so and so location, or if you start business at so and so location, then out of the total funds required for commencement of the business, some portion we will give. Some portion we will give. We don't want ownership. Giving money and getting ownership is not grant. So we don't want ownership, we will give you some money. Oh, 100 crore required. If I want 100 crore, I need to arrange only 80 crore. Government will be giving 20 crore. Now, that grant is called, in the nature of promoters contribution, should be credited to capital reserve. Should be credited to capital reserve. So, grant in the nature of promoters contribution should be credited to capital reserve. If it is relating to non-depreciable asset, land. Sir, I am buying land for my business expansion. Government is giving me money for buying of this land. Then either I can reduce that grant from value of land, or I can show it as capital reserve, or I can show it as capital reserve. So thereby in the balance sheet, so I purchase land for 100 crore. Government is giving me 20 crore. Now I can reduce that and show land value as 80 crore. Alternative is that showing this as capital reserve. We should not show both. Alternative is that show land at full value and show capital reserve 20 crore. Like that we should be showing. This is not available for dividend purpose. This is second treatment or second grant accounting. Third, this is the examination generally tested area. Sometimes they will ask you simple treatment, like they will give 5 different case studies. That already tested in the last examination. But this time again, if it has to come now, see, repetition is possible because it is 30 marks. We can't every time guarantee that alternative and all, because 30 marks, 6 question will come. So already 4 standard came, remaining 4 only will come. Minimum 6 standards will come. No, so repetition is always possible. Our government grant lane, so if it is relating to depreciable asset, PPE, so at that time, what's the treatment of grant? There are 2 treatments, my dear friends. I purchased one machinery for 100 lakhs. I am getting government grant of 20 lakhs. One treatment is that reducing grant from machinery and showing the balance value as machinery value. Alternative 2 is that in the balance sheet, machinery will be shown at 100 lakhs and this 20 lakhs will be treated as deferred income, DGG, deferred government grant. Then what will happen now? In the same proportion in which you charge depreciation, in that proportion this also will go to P&L credit. It will go to P&L credit. So thereby, so suppose the useful life of the asset is 5 years. Under alternative 1, 80 lakhs divided by 5, 16 lakhs, right? It will go to P&L as depreciation. So, this account, if they ask you journal entries, what are the entries? Okay, method 1 ki journal entries. First, machinery to bank, 100 lakhs. Bank to government grant, 20 lakhs. Government grant to machinery, 20 lakhs, like that. Then depreciation to machinery, 16 lakhs. Depreciation will be transferred to P&L. Hope you are understanding this. Like this, we will be making entries, my dear friends. If it is this way, then machinery to bank, 100 lakhs. Machinery to bank, 100 lakhs. Bank to DGG, 20 lakhs. Depreciation to machinery. Machinery to bank, 100. Bank to DGG, 20. Then depreciation to machinery, 20 lakhs. How 20 lakhs? 100 lakhs divided by 5. Similarly, DGG to P&L direct, you can make to GG and then P&L or directly to P&L. 20 lakhs by 5, 4 lakhs. Now in that case, in P&L, you will have debit of 20 lakhs, credit of 4 lakhs, net effect is 16 lakhs. Now, both the cases, treatment is same only. So, method 1 and method 2, effect is same only. I hope you are following this, everybody. Okay. This is treatment of receipt of grant. Either reduced from asset, reduced value will be depreciated, or show it as DGG and then both asset and DGG will be taken into P&L debit and credit respectively in the proportion of depreciation. Like that we discussed, my dear friends. You hope understood the treatment. When you have refund, my dear friends, the standard states that refund treatment is very simple. Reverse the original treatment. When you received the grant, if you have credited capital reserve, it shall be debited to capital reserve. If you received the grant, if you already reduced from the value of asset, now refund will be increasing the value of asset. Value of asset. Like that we should understand, my dear friends, all of you. Okay. Similarly, if you are credited to DGG now, then at the time of refund, DGG will be debited. Adala ore problem enna, suppose you have credited DGG, but already you have taken to P&L, only after 3-4 years, now you are refunding the grant. At the time DGG illa sir na, then you can debit P&L. Sir, DGG is there, but partially it is there, sir. Partially gone to P&L na. Then what is available in DGG? Debit DGG. Further refund will be debited to P&L. Hope you are following this, everybody. Sorry. Appo refund treatment is reversal of original entry. Similarly, if you have received a grant for services, past services na, entirely credited in P&L. If it is for future services na, it should be taken to DGG, and every year in the proportion of expenditure to be incurred, it will be debited to it will be credited to P&L. It will be transferred to P&L. These are the treatments, my dear friends. When you receive asset at concessional value, 100 lakhs asset, government is providing me at 75 lakhs. And very simple, record the asset at concessional value. Asset to bank, 75 lakhs. Free of cost received na, should be recognizing the asset at nominal value, 1 rupee or 100 rupees. So, other value you should be recognizing the asset. Like that, we have provisions of AS 12, government grant. Hope you are following this, everybody. Seri, ipo or example, my dear friends. So, we have purchased one machinery. 30 lakhs, my dear friends. Government grant received, it is 12 lakhs. Government grant received 12 lakhs. Residual value, it is 6 lakhs. Useful life, it is 4 years. Useful life 4 years. In year 2, government grant refunded 7.5 lakhs. Government grant refunded 7.5 lakhs. Give journal entry for 2 years. Under both methods. So, we'll very quickly make journal entry for 2 years under both the methods. So, it is like this, my dear friends. What is the journal entry? So, we have given machinery purchase for 30 lakhs, grant received 12 lakhs, residual value 6 lakhs, useful life 4 years. In year 2, government grant refunded 7.5 lakhs. Now, give journal entry for 2 years under both the methods. First 2 years, okay. So, method number 1. What is method number 1? It is showing the grant as DGG. Okay. So, entry is machinery to bank. How much? It is 30 lakhs. Bank to DGG, it is, this is year 1. Bank to DGG, it is 12 lakhs. Then depreciation to Machinery, 30 lakhs divided by 4, it is 7.5 lakhs. 30 lakhs, sorry. 30 lakhs minus 6 lakhs, the residual value divided by 4. Extremely sorry. It is 6 lakhs. Then P and L to depreciation implied, that entry also should be made. Similarly, DGG to P and L, DGG to P and L, it is 12 lakhs divided by 4, it is 3 lakhs. 12 lakhs divided by 4, it is 3 lakhs. So this is the year 1 entry. This is the year 1 entry. No refund happened. Now year 2 la beginning year in year 2 refund, beginning it is refunded. That is implied from an examination academical viewpoint. So refunded. Our refund entry, my dear friends. What is the entry na? It is you have repaid how much na? 7.5 lakhs, my dear friends. So there is a repayment of 7.5 lakhs. So thereby entry is DGG debit, it is 7.5 lakhs. DGG debit 7.5 lakhs to bank 7.5. Entire grant is not refunded, only a part of the grant is refunded. Hope you are following this. So DGG to bank, it is 7.5 lakhs. Then entry is depreciation to machinery. So what happens now? Depreciation will not undergo any change. Depreciation will not undergo any change. So entry amount will be same 6 lakhs da. Because asset value is not affected. Asset value is not affected. Only thing is DGG to P&L. How much will be the DGG to P&L na? Originally 12 lakhs, 3 lakhs amortized, 7.5 refunded. So remaining amount, it is amortizable in 3 years time. Remaining amount amortizable in 3 years time. So it is 10.5, so 1.5 by 3, it is 0.5 lakhs. 0.5 lakhs. So this is how we make the entry. Hope you are understanding, all of you. Okay. So this is first method. But this is the latest RTB question. RTB question, they ask you only second method. These facts. Numbers are same. Question is same. Only thing is they didn't ask you first method, they ask you second method. So second method what? Grant was deducted from asset. Grant was deducted from asset. Deducted from asset. So in that case, what is the journal entry now? My dear friends, it is year 1. Year 1. Machinery to bank. Machinery to bank, it is 30 lakhs. Machinery to bank, it is 30 lakhs. Then bank to machinery, within bracket government grant. What is that amount now? It is 12 lakhs. Receipt of grant. Next, depreciation to machinery. Depreciation to machinery. How much is that? 30 lakhs minus 12 lakhs is the adjusted cost. Minus 6 lakhs, the depreciable amount divided by 4. So it is 3 lakhs. 3 lakhs. Apo you understand that year number 1 depreciation is 3 lakhs. Hope you are following this, everybody. Sir, ipo year 2 grant was refunded. Grant was refunded. How much? Entire grant was refunded. You received 12 lakhs, but you refunded 12 lakhs. No, I refunded only 7.5. What is the entry? It is machinery to bank. Again you are purchasing. No. Refund of grant. Refund of government grant. It is 7.5. It is 7.5. Then we charge depreciation. Depreciation to machinery, can you tell how much? Depreciation to machinery. What is the depreciation to machinery? Very good, very good. Super. About depreciation to machinery, my dear friends. So originally we recognize the asset at 30 lakhs. We already reduced it by 12 lakhs. So then we have depreciated that by already by 3 lakhs. Already depreciated by 3 lakhs. Appo today it is 30 lakhs is the original cost, adjusted by 12 lakhs minus depreciated in the last year 3 lakhs, depreciation in the last year 3 lakhs. Now when you refund it, it becomes 7.5 lakhs increase, 7.5 lakhs increase. Now this will be the book value, but minus 6 lakhs should be done because that's the residual value. So we should do what? Remaining depreciable amount. And the 6 lakhs already reduced, no sir? No pa, that you deducted for computing depreciation, not in the books. Books la residual value yet to be deducted, my dear friends. So 30 lakhs original cost, 12 lakhs was the grant received, 3 lakhs first year depreciation, up to this first year book value. When you refund, book value increases. Now up to this, it is called carrying amount of the asset. You can show computation. So carrying amount minus 6 lakhs divided by 3 years, it is 5.5 lakhs is the depreciation. Hope all of you understanding this. All of you in this examination, this much comprehensive they don't ask. They ask you the same question and ask journal entry only for second year. They asked journal entry only for second year. They didn't ask you journal entry for first year also. Hope you're understanding this. All of you, treatment of receipt of grant, refund of grant and depreciation impact. So this could be an area from AS12 if they are testing it, because last examination they tested case study type of all the grant, service, asset, promoters contribution, everything they tested. For computational, this can be a question, my dear friends. So you should be aware of this calculations. All of you. Super. Any doubts? Na? Please do raise. With this, we are concluding into. On to. So if so, sir, so depreciation is on WDV method. You know, pusa doubt kekada, my dear. So it is not WDV method, my dear friend. It is straight line method only. But you should know, whenever value of asset is changed, then depreciation should be changed on a prospective basis by considering remaining depreciable amount, remaining useful life. This is as per AS 10. Property, plant and equipment. Value of asset subsequently changes na, then depreciation should be changed on a prospective basis. How do I change? By considering remaining depreciable amount, remaining useful life. That is what we have considered here. Remaining depreciable amount, remaining useful life. Hope you are understanding this. Shall we proceed? All of you? Okay, so with this we are concluding on to AS12 treatment. Just quickly glancing through now AS11. As far as AS11 is concerned, my dear friends, we have 16 over, 13 over, 12 over. 5 standards we are having, my dear friends, AS11. So as far as AS11 is concerned, we have 3 topics. What and all 3 topics? Na? Accounting for foreign currency transactions. Accounting for foreign currency transactions. Then translation. This we have already done in the previous class. Translation of a foreign branch based on integral foreign operation, non-integral foreign operation. Classifying into monetary items, non-monetary items. Here it is classified into P&L items and balance sheet items. Here the difference arises will be treated as gain or loss. This is FCTR. Like this, translation rules already we discussed in the previous class. Yesterday's revision class, all of you. So now we just quickly want to discuss about this accounting for foreign currency transaction as well as the accounting for forward contract. Accounting for forward contract. If you have forgotten, adu chuma recap pannuvom. So my dear friends, as far as accounting for foreign currency transaction is concerned, transaction should be initially accounted at the rate prevailing on the date of transaction. Later on the balance sheet date. So initially accounted at transaction rate, transaction date, exchange rate, that's transaction rate. Later on balance sheet dates, monetary items if any. Sir, technical definition I don't want to bring, simple definition, common man understanding. Cash in hand, cash at bank, receivables, payables. Receivables, payables. Only assets and liabilities. Incomes and expenses are never monetary item. They are non-monetary items. Only assets and liability expresses receivables and payable, fixed receivables and payable. Okay. So this monetary item shall be restated based on the balance sheet rate. At that time, if you get any difference, that is exchange gain or loss. Exchange gain or loss, it should not be adjusted against the purchases value or sales value, etc. and all, or it should be detached from the origin of the transaction. Even the subsequent gain or loss should be directly shown in P&L as exchange gain or loss. Because the question was asking like this: one of the company purchased goods from foreign country for $10,000. At that time, 10,000 into 60 was accounted, 6 lakhs purchases accounted. At the end of the year, the creditors yet to be settled. Since money is not paid, it is restated. Creditors is restated. Ab extra 50,000 was added to creditors value. What they did is that it was adjusted against cost of material consumed. Cost of material consumed. So discuss in accordance with the respective standard. Then you will write as per AS 11. Transactions are initially to be accounted at the transaction date exchange rate. Subsequently, monetary item shall be restated. So up to this it is correct only. But restatement differences should be recognized as strictly gain or loss in statement of P&L. It should not be adjusted against any of the non-monetary items. So thereby the treatment given by the company is not correct as per AS 11. Like that you should provide the answer, my dear friends, all of you. Okay, so monetary item shall be restated and the upper entry will be what? Originally purchases to creditors, it was 6 lakhs. If the question asks you entry, later on exchange loss or gain, creditors increasing, exchange loss to creditors 50,000, 50k, like that you are accounting. So how 50k came? Because on that date it was 60 rupees exchange rate, now 65. About 10,000 into 5 the increase. So 10,000 into 5, 50,000. Like that we are making the entry. Hope you are following this, everybody. Next, at the time of settlement in the next year, settlement in subsequent year, difference between settlement value and balance sheet value will be further recognized as gain or loss of the settlement period. It should not be past amount restated and all. Past whatever accounted is accounted only. You can't change. But subsequently, when you realize you are receiving $10,000, I mean you are paying $10,000. I'm sorry, not receiving, paying $10,000. At that time, it was 63 rupees. At that time, 63 rupees. Our creditors 6,50,000 to bank. You are giving $10,000 whose value is 6,30,000. You are getting an exchange gain of 20,000. So actually no sir, in this transaction don't you feel that you are having a loss of 30,000? Last year loss 50,000 account is wrong. So last year loss 50, this year gain 20. Like that only you should be accounting. Hope you are following this. Transactions initially accounted at the rate prevailing on the date of transaction, 10,000 into 60, that amount. Later on, monetary items, the creditors alone will be restated, not purchases. Purchases is a non-monetary item. Incomes and expenses, non-monetary item. That should not be restated. So, creditors, debtors and all restated. Loans, if you are taken from foreign bank, should be restated. So, such a monetary item restated at the closing rate. Difference is recognized as gain or loss in P&L. Should not be adjusted like any other place. Then, at the time of settlement, further gain or loss arising, that should be recognized as gain or loss of settlement period, subsequent period. Like that, you should be knowing the accounting, my dear friends. Hope you remember this. Accounting for foreign currency transaction. That's one point. Suppose you have long-term monetary item. So, and they have applied para 46A option. Then, my dear friends, you should be knowing that if that long-term monetary item attributable to depreciable asset, other cases, If it is attributable to depreciable asset, then exchange gain or loss will be adjusted against the value of asset. Exchange gain or loss adjusted against value of asset. Value of asset. If it is not related to depreciable asset, sir, I took a foreign loan, sir, and I am purchasing building here, sir, then no problem. Purchasing machinery here, sir, no problem. Then you adjust against the value of the asset. But you use it for working capital purpose, then the standard says it should be recognized in an account called FCMITDA. Very, very good. All of you remembering. Super. I could see many answering in the comment section. Foreign currency monetary item translation difference account. Sari, what is the basic accounting, sir? For example, so we have taken loan 1,421. So we have taken a loan $1 lakh. I don't want to change different numbers, say 60 rupees. What is accounting? Bank account debit to loan. It is 60 lakhs. By 31st March 2022. Now the exchange rate is 65. Oh, loan should be restated. Loan is increased by 5 lakhs. And you have exchange difference of 5 lakhs. Exchange difference of 5 lakhs. Now, what is the treatment of this exchange difference? Loan is increased by 5 lakhs. Now, it will be in the balance sheet 65 lakhs. What is the treatment of this 5 lakhs? Now, either adjust to value of an asset. Either adjust to the value of an asset or recognize, transfer to another account called FCMITDA, depending upon whether it is relating to depreciable asset or not. But this is applicable only if the company applies the option given in para 46A. If the company does not apply para 46A option, then this should have been taken to P&L. This should have been taken to P&L. So the normal treatment is it is fully P&L. Whether it is short term, long term, doesn't matter. Relating to asset, not relating to asset. Every exchange gain or loss strictly to P&L. This is an option given, irreversible option. We told, my dear friends. Finally, what is the conclusion? Class mari nadutama correct conclusion madu sonunga. Loan mari transaction kodutha, follow the directions of the question. If the question doesn't give you the directions, then you may have to give 3 answers. What are 3 answers? Option of AS11 exercised. Option exercised. Option not exercised. Only 2 answers now, no, sir. Option exercised, it is relating to depreciable asset, not relating to depreciable asset. Then option not exercised, then amount will be recognized in P&L. If it is related to depreciable asset, adjusted against depreciable asset. Like this, 3 answers need not be given if the question have already conveyed that they are already following the option or not following the option. Hope you are following this. Debtors, creditors, like this you need not discuss. Debtors, creditors, you need not discuss like this. Why, sir? Because that is short-term monetary item. In the option applicable only if it is long-term monetary item. All of you, so no confusions. No confusions. I hope you are following this. Okay. So, if it is not relating to depreciable asset, then you should simply write that it should be taken into FCMITDA account. That's all, my dear friends. Hope you are following this, everybody. This is accounting for foreign currency transaction. Accounting for foreign currency transaction. Instead of taking into P&L, in the option given, and the option exercise and the exercise. This is a rare point. Suppose the question is giving that asset was originally purchased for, this particular asset was originally purchased for 90 lakhs. That is partly funded by this loan. Now, imagine they opted this para 46A. Now, what is the revised value of the asset? What is the revised value of the asset? The exchange difference should be adjusted. No, exchange difference should be adjusted. What is the revised value? What is the revised value? In the example, 60 rupees becomes 65. No, revised value will be, so in the exchange difference now should be adjusted against the value of the asset. Should be adjusted against the value of the asset. Asset value will become 90, 95, 85. 90, 95, 85 அப்படினா So sometimes you may tempted, இன்னைக்கு யாரும் தப்பு பண்ணல, எல்லாம் சம ஃபார்ம்ல தான் இருக்கீங்க. It is 95 lakhs because exchange loss அப்படினா sometimes will be tempted to reduce it, my dear friends, but this loss is an expenditure. It will increase the value of the asset. So do not make it as 85 or entry wise visualize பண்ணாலே போறோம். Asset to exchange difference, asset is debited, asset value become 95 lakhs. Hope you are following this, everybody. இது accounting for foreign currency transactions. So இந்த options எல்லாம் exercise ஆகல. or debtors creditors transactions sir, ரொம்ப simple. So அதை restate பண்ணி up to balance sheet date, exchange rate gain or loss in that period, settlement period gain or loss in that period, and also make a clear understanding it should not be adjusted in any other place. One lean P&L, one lean P&L, that is what we should understand as accounting for foreign currency transaction. All of you சரி, அடுத்தது forward contract. Shall we discuss that? Forward contract. Summer rain after this class. I don't know how I will go to my home. I should Ola boat ஏதாவது available ஆன்னு check பண்ணு. சமம் ஓகேல? Okay. Let's now proceed further, my dear friends, to forward contract. As far as forward contract is concerned, my dear friends, what is a forward contract? For business enterprise enter into a contract to buy or sell foreign currency on a future date. To buy or sell on a future date, so I will buy or sell foreign currency. Like that I am entering into a contract today. That is what we are understanding as forward contract. Actions future, signing today, that is what forward contract. Okay, what is action? Future action of buying or selling foreign currency at a particular prefixed price, prefixed rate. Sorry, for what situations? Today you are signing one document stating that I will buy dollar, I will sell dollar. Now maybe it is an act of hedging or an act of speculation. What is act of hedging abdina? I foresee that in future due to my business transaction I have some dollar receivable or dollar payable. I have natural dollar receivable payable. Suppose in this today scenario, in future I have dollar payable. I purchased goods from foreign country, I have dollar payable. But in the dollar போகிற ரேட்டை பார்த்தா பெட்ரோலை பீட் பண்ணிடும் போல இருக்கு. அந்த மாதிரி ரேஸ், இப்போ பயங்கர ரேஸ், இதுக்கா அதுக்கா அப்படின்னு ரேஸ். ஸோ ஐ ஃபியர். ஸோ டுடே இட் இஸ் அரௌண்ட் 80s போகுது. டுமாரோ வாட் இஃப் இட் இஸ் 100? ஐ ஹவ் $1 lakh பேயபிள். 1 lakh into 20 na 20 rupees. Tomorrow exchange difference increases na 20 lakhs extra will be paid. But today some bank will be offering me, say today you sign the contract, we will take a risk. Bank is ready to take a risk, stating that they will offer you at 85 rupees. After this many months, you need to pay 85 rupees per dollar. 1 lakh into 85 rupees. 85 lakhs if you pay, we will give $1 lakh. Like that they are telling the contract. So it is act of hedging, so that I fear it may become 100. So I have a dollar payable. So to pay dollar in future I have to buy. Adukku ippave I am enter into contract. That is what we are doing. That is called act of hedging. So to nullify a payable foreign currency, we are entering into a purchasing foreign currency contract. Or you have a dollar receivable in future and dollar value keep on decreasing. 80 ஆகுது, 70 ஆகுது, 60 ஆகுது, 50, 40 அப்படினா ஆகுது. Some fear. Appa I have dollar receivable. I don't know how much cash then I will be getting. So thereby I enter into a forward contract to sell dollar. So if you have a dollar receivable from a normal transaction, you are entering into a forward contract to sell dollar. If you are having a dollar payable in future, you are entering into a purchase contract. So nullifying this business as transaction is what we call it as act of hedging. Act of hedging. Speculation contract. Appo how do I know by reading a question in the exam it is hedging or not? They should have given you the business la I have purchased the goods, I have dollar payable, so thereby I am entering into a purchase contract. Like that, it's very clearly given now that it is hedging, or they should have mentioned it is a hedging contract. Understood? Otherwise, simply a transaction given na, we cannot understand as hedging. It is only a speculative transaction. Speculation na, foreign currency transaction I have never made, but suddenly I feel that future la dollar will behave like this, no prediction. So I am making a gambling here or prediction. Other base pani I am entering into some transaction to get some future gains. That is what we call it as speculation. I somehow feel that dollar now is going to increase in the future. Value is going to increase in the future. If I enter into a purchase contract for 85, I think that it will become 100. What I will do after 6 months, the bank is forced to sell me at 85, and in the market I will sell for 100, and without chumma doing any work, I am getting 15 rupees gain. Risk irukku. Unoda prediction mari 100 pogama. As per the promise of the government, it is becoming 40 na nee setta. So there is a huge risk also, my dear friends, in the gambling speculation transaction. Okay, but here you don't have that risk. What if you think that it become 100, and what if it is becoming 40 rupees? Hedging transaction, why you don't have the risk na? Because $1 lakh you will receive, that $1 lakh you will give to somebody, but dollar nala you are not having any effect. So because you are having some receivable against which you had payable, so dollar received, dollar paid, or dollar from some other external source received, you gave to bank. External source payment pannu, so bank line received, paid to the external source. Edo hedging. So thereby, my dear friends, now accounting. So we understood meaning of this transaction. So accounting is very simple. Difference between spot rate, which is contract spot rate. The spot rate na, the rate prevailing on the date of entering into contracts, and contractual rate, which we call as forward rate. The question may mention this as forward rate or contractual rate. The rate mentioned the contract. Suppose today 80 rupees. I expect in future 100, but with the bank agreement is 85 na, then maximum I am arresting my loss to 5. So my loss is fixed and it is mandatory also. I can't avoid this 5 rupees loss. So that difference between these two values will be accounted as deferred discount or premium over the period of contract. Suppose this contract period is 3 months. The contract period is 3 months. Entire 3 months falling in same accounting year, na, no problem. No concept of deferral. Everything will be booked in the P&L. But if this 3 months falling between like this 1/3/2022 to 1/6/2022 na, then 1 month related discount will be accounted in the year up to 31st March and 2 months in the year 22-23, 1 month in the year 21-22. Like that you should defer this. Okay, but you should know two things. One is deferral concept, another one is how much. The difference between the rate prevailing on the time of entering into contract and contract rate, and the contract rate is what you should consider as gain or loss, will be recognized as discount or premium. All of you, primarily they will ask you the treatment of this amount only. So if it is hedging contract na, this is what to be done. If it is speculation contract na, then difference between in speculation what happened, today 80 pa, in your promise contract it is 85. Your gain or loss is not based on 80. Your gain or loss is not based on 80 because you don't have any receivable or payable. So you have 85 rupees contracted. At that time market price how much? So that will tell whether you are having more gain or more loss. About difference between the contractual rate and spot rate at the end of contract. Spot rate at the end of contract. will be considered as the gain or loss, exchange gain or loss, exchange gain or loss. So here no deferral concept and all. The recognition of gain or loss comes only on the recognition of gain or loss comes only on the date of settlement. At the time of settlement, difference between dash and dash will be accounted as gain or loss. How much abdina? Contractual one rate is available and the spot rate. Sir, here also you are using spot rate. Here also using spot rate. Illapa, this is spot rate at the time of entering into contract. This is the spot rate at the time of end of the contract. I hope you are following this. All of you. Sorry. Appo, please understand my dear friends. For example, 3 months forward contract. 3 months forward contract to buy $40,000. The contract was entered into by 1st March 2022. Like this contract was entered into. 3 months contract. All of you? Okay. Ipo exchange rate. My dear friends, exchange rate. It is by 1/3/2022 spot rate. 1/3/2022 spot rate. $1 equal to 70. Then 1/3/2022 forward rate. $1 is equal to 76. 1/6/2022 spot rate. 1/6/2022 spot rate. It is 81. It is 81. Now tell me, my dear friends, what will be the gain or loss? Gain or loss recognition if contract is number 1 hedging, number 2 speculation. Number 2 speculation. Hedging and speculation. So what will be the gain or loss recognition if the contract is hedging, if the contract is speculation? Like that you should tell, my dear friends. So primarily it is a contract, 3 months forward contract on 1st March 22 to buy $40,000. If I have given the values like this, my dear friends, so 1, 3, 1, 6 values given. What is the gain or loss if it is hedging, if it is speculation? Like that you should be giving the answer. If it is hedging, then deferred discount, in fact it is not even discount, deferred premium to be recognized for year 1, to be recognized for year 2. So it is 40,000 into 76 minus 70 is the maximum, divided by 3 months into 1 month. Similarly, 40,000 into 76 minus 70 divided by 3 into 2. So an 81 is not at all a consideration. So thereby it is 80,000 and here it is 1,60,000. This is the recognition if the contract is dash, hedging contract. Hope you are following this, everybody. So what is hedging? I explained you. Hedging on a treatment measurement is what we are explaining. Suppose the contract falls entirely in the current year. Suppose somewhere in July the contract ended into August, October the contract expired na, then entire 2,40,000 will be recognized in the same year. But if it is falling in 2 different years na, then over the period of contract it should be apportioned. Hope you are understanding this, all of you. Okay. Now if it is speculative contract, then entire gain in the year 2, that is in the year 22-23 la dhan gain. So here year 1 அப்படின்றது 21-22, this is 22-23. So what is that accounting அப்படினா 40,000 into 81 minus 76. 81 minus 76. Entire gain, no deferral, no amortization, all of you. So will be accounted. How much is that? 2 lakhs. Hope you're following this. So 2 lakhs will be accounted, my dear friends. So it is difference between 81 and 76 will be accounted entirely in the second year P&L as a loss. Loss, huh? We are buying at 76. So here it is actually a gain. He is having a gain because he is having the contract to buy for how much? 76. But market it became how much? 81. So market 81 la irukumbodhu he can buy for how much? 76. Appo it is a gain situation, loss situation also you should be knowing. It's a gain of 2 lakhs will be fully accounted in year number 2. Hope you understand this, everybody. Appo if it is hedging contract na, difference between the rate prevailing on the date of contract and forward rate. The forward rate, the contractual rate. That rate only will be accounted. Actual rate at the end of contract is irrelevant. Actual rate at the end of contract is irrelevant. Understood? Similarly, if it is speculation, then the rate prevailing, the rate mentioned in the contract and actual rate prevailing at the end of the contract. This much only you should be knowing, my dear friends, all of you. And one is amortized if it is falling in 2 different years. Other one is fully recognized in the settlement period. This much only. Hope you understand. No confusions relating to speculation and hedging contract, my dear friends. With this, we are completing AS11. AS11. As I told you previous day, so in between you are switching off the video. Already 5-6 only in the video is on. So in between switching off the video, going for a breakfast break, illa tea coffee kudikiradhu ellam pannunga regular idhula. So any requirement is there illa pain, body pain da adella okay. So I just keep on continuing. Okay, so we have remaining 4 standard 1 to 310. 1 to 310. These are the 4 remaining standards, my dear friends. Shall we go to the next standard? So AS10, property, plant and equipment. AS10, property, plant and equipment. Something that we have taken for 10 hours. Or standard alone 10-11 hours we have taken. Barrel plant, PPE, definition, blah 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 blah. Okay, so accounting la it is initial recognition. When it is initial recognition, when you purchase, acquired it by payment of cash, it is purchase price plus all other directly attributable expenses. Directly attributable expenses. So in the all directly attributable expenses, you have cost of site preparation, delivery cost, handling cost, installation cost, assembly cost, then professional fees paid, employee cost, then trial run also, trial run cost. All these are directly attributable cost. Then PV of dismantling liability. PV of dismantling liability. Certain things should not be considered for cost. Inauguration cost, marketing cost, abnormal cost, internally generated profits, all these things. Then general administrative overheads. So selling and other distribution expenses and the money expenditure should not be part of cost. This is now what we discussed for 1.5 hours at that time. Okay, so then if it is a qualifying as a interest should also be added. So normally when it takes some time, interest given and the interest up to the date as it is ready for you should also be added. So இது base பண்ணி some number of expenses given, you should know what is to be included, what is to be omitted. All of you, okay. இது acquired for cash. If it is exchange அப்படினா recognized at fair value. Fair value of asset given up is given priority. Fair value of asset is given up is priority. So when you buy one asset in exchange, those asset which has been given up, adora fair value the cost of the asset acquired. That's all. Fair value not given up, book value of asset given up. Book value of asset given up. All of you, along with you giving asset, if you give some cash also, then both together will be the value of the asset acquired. Similarly, you gave asset, you got asset and cash abdina, then that cash will be reduced from the value. If you give cash, it will be added to the value. If you receive cash, it will be reduced from the value. That also you should be remembering, my dear friends. This is exchange transaction. Very, very simple. So what happens now? Asset A, which is exchange to purchase asset B. Asset A was given and asset B was purchased. So fair value given. Fair value, my dear friends, of asset A. Fair value of asset A. Fair value of asset A 20 lakhs. Now, by giving this, we received 2 lakhs cash. We received 2 lakhs cash now. Entry will be, it is asset B debit to asset A, which is having a book value of 15 lakhs. Appo credit asset A only to the extent of book value. Asset B recognition we are discussing at fair value of asset given up, but credit asset A which is going out only at book value. Then are we receiving cash or paying cash or receiving cash? So this together should be 20 lakhs. Appa cash received 2 lakhs now. This has to be 18 lakhs. Like that we are understanding, my dear friends, all of you. So then we have profit on exchange. This is 13 lakhs, 18 lakhs. Then we have profit on exchange to the extent of 5 lakhs. So credit asset only at book value of asset what we had. Debit asset at the fair value of asset given up. Along with receiving asset, you receive cash also now. Then the cash will be reduced from the book value, fair value. Suppose you pay the cash now, then that will be added to the fair value. Hope you are following this, everybody. Like this, we have learned the exchange transaction, my dear friends. Commercial substance, and the commercial substance is there. Like this, fair value given, this is the accounting. Next is self-considered assets. Now, material cost, labor cost, overhead cost should be added. Abnormal cost, if any, like what you told some movie that came, no, VIP and all. So, and the abnormal material, abnormal labor and all should be excluded, my dear friends. All of you. Like that, we discuss initial recognition, subsequent recognition, subsequent recognition. Subsequent recognition munnadi we need to understand subsequent expenditure. Subsequent expenditure. Initially you capitalize some amount for PPE, for you acquired by cash or exchange with some asset, you capitalize some value which is called cost of PPE. Subsequent expenditure now you are incurring expenditure after the initial recognition. It may be for normal repairs and maintenance. We call this as day-to-day service cost. Day-to-day service cost. Day-to-day service cost. Repairs and maintenance. Always it is expensed. Day-to-day expenses, service cost. Repairs and maintenance, it is expensed. But if you replace any major part, it should be capitalized. It should be capitalized. You don't look into whether it increases the efficiency of the asset, life of the asset, etc. and all. Even if it is life going to be same, but part is replaced now, still major part, it has to be capitalized. Remember, my dear friends, carrying amount of exactly roof example, sir, roof of house example you told, super, very good. We also solve a problem involving road trailer. Okay, so remember that carrying amount of replaced part shall be derecognized. Carrying amount of replaced part shall be derecognized. Similarly, you have major inspection cost. That also should be capitalized. That also should be capitalized. Latest RTP, you have a beautiful question based on this. So, in the major part being replaced. So, listen carefully, my dear friends. See, cost of asset. Cost of asset. Say it is 200 lakhs. 200 lakhs. Useful life 10 years. Useful life 10 years. At the end of year 2, a major part was replaced, whose original cost was 50 lakhs. Cost of new part 60 lakhs. Cost of new part 60 lakhs. Find carrying amount at the end of year 2. Another question. This much only question. The question also asked you like that whether this amount can be capitalized or not. So as per ASN property, plant and equipment, if a major part is replaced, it has to be capitalized. In the given case, it is a major part, thereby it has to be capitalized, like that you should write. Then the carrying amount or revised carrying amount of the asset, overall asset, how much of the question. So you have to tell the amount. It is not as complex as we did for the road trailer. It's very simple. Yeah, Rohit, very good. For the answer, I don't know, we need to check, we need to confirm the answer. So cost of asset 200 lakhs, useful life 10 years. At the end of year 2, a major part was replaced whose original cost was 50 lakhs. Cost of new part is 60 lakhs. Find carrying amount at the end of year 2. Super. It may be 180. So we'll just quickly check this, my dear friends. Okay. So what we should understand is that revised the carrying amount of asset. Carrying amount before replacement. Carrying amount before replacement is 200 lakhs minus 200 lakhs divided by 10 into 2. So 20, 40. So it is 160 lakhs. This is carrying amount before replacement. Then what we should do now? Cost of new part should be capitalized, which is 60 lakhs. Cost of new part is to be capitalized, which is 60 lakhs. Minus carrying amount of old part. You should be really careful there. Carrying amount of old part. So which is 50 lakhs minus 50 lakhs is original cost. Original cost na the amount that has been incurred at time of purchase minus 50 lakhs by 10 into 2. So this is the carrying amount of the old part to be replaced. So which is 40 lakhs. This minus panna we get 180 lakhs. This is how we arrive at the revised carrying amount. Hope you are understanding this. In the road trailer problem, they didn't give you this 50 lakhs. But what we did is that in the 60 lakhs, we discounted, adukapra adu depreciated. 60 lakhs, we discounted, then depreciated. Adukku discount rate should be given. I hope you are following this. So like that, a beautiful problem is there in the RTP. Hope you understand this. Otherwise, you can refer the RTP also. Okay. So new part, whatever amount you incur today, fully will be capitalized. Old part getting replaced. Adoda carrying amount should be found out. WDV should be found out. Original cost illa WDV should be deducted. So like that we are arriving at the revised carrying amount by end of second year as 180 lakhs. I hope you are understanding. Everybody? Okay. So this subsequent recognition. Subsequent recognition, highly important area. Next. Subsequent recognition. Subsequent expenditure. Subsequent expenditure. Next we have subsequent recognition. So business can follow either cost model or it can follow revaluation model. It should follow consistently. Cost model na original cost minus accumulated depreciation. Revaluation model na recognizing at fair value. Recognizing at fair value. This is basic understanding. Problems from the revaluation model two things. Revaluation model two things. Number one, treatment of revaluation profit or loss. Treatment of revaluation profit or loss. Adukaprom accounting entries in which we had two approaches. One is called the restatement of gross carrying amount and accumulated depreciation. Restatement of cost and accumulated depreciation. Then we had restatement of net carrying amount. Net carrying amount. Like that we had two approaches. Quick, I will demonstrate this. So first, revaluation profit or loss in a treatment. Profits are credit to revaluation reserve. Loss means debit to P&L account. But before doing this, you check, is there any treatment given in the past? In past, if you have given opposite treatment, what is the opposite treatment? For the same asset, in the past there was loss. What you did in the past, you have debited P&L, when you have profit now, then don't credit revaluation reserve, credit P&L, balance profit only, you credit revaluation reserve. We have made a statement like this: profit na credit revaluation reserve unless it is, except it is credited to profit to the extent of loss previously accounted. What was the statement? Generally credit revaluation reserve, profit na revaluation reserve da, except that it is credited to profit P&L to the extent of revaluation loss debited in the past, like that we told. Similarly, same discussion here. Loss na normally debited to P&L. Normally loss na P&L to asset. But except that it is debited to revaluation reserve if there was any revaluation profit accounted in the past. Like that, whatever happened in the past, that has to be reversed, then give original treatment. Original treatment is profit na revaluation reserve, loss na P&L. This is the basic understanding about revaluation profit or loss. All of you, seri. Ipo in the method, what is this method? Two different methods. So it is cost 8 lakhs, accumulated depreciation 3 lakhs. Now today fair value, my dear friends, today fair value is 6 lakhs. Today fair value 6 lakhs. About two approaches, what abdina, both these items in the books, what you should understand is that asset is there at original cost, accumulated depreciation is there in another account called provision for depreciation account. So two accounts you have. Both are restated in the proportion of fair value to the net carrying amount or net book value, which you are computing this as 5 lakhs. Actually 5 lakhs it is becoming 6 lakhs. Now in this proportion, what you do, you restate these two values. Adjusted cost will be how much, or revised cost will be how much abdina? 6 lakhs is the value attributable to 5 lakhs. What is the value attributable to? 8 lakhs you should find out. So what is it coming to? It is 9,60,000, correct? Similarly, accumulated depreciation, revised balance will be same proportion. 6 lakhs is the value attributable to 5 lakhs. What is the value attributable to 3 lakhs? It comes to 3,60,000, which means 8 lakhs increased by 1,60,000. This 3 lakhs increased by 60,000. What do you think the accounting entry? Accounting entry is asset account debit. We don't make entry for 1 lakh. We are making entry for 1,60,000. Credit accumulated depreciation, also called as provision for depreciation, to the extent of 60,000. Credit revaluation reserve 1 lakh. This is one method. Another method, easiest method. What is the easiest method, sir? So method number 2 is that, sir, in the books you said 2 accounts is there. First, make it single account, sir. Provision for depreciation you charge against asset account. So it is accumulated depreciation or provision for depreciation to asset. How much? 3 lakhs. Asset which was showing 8 lakhs debit now automatically reduced by 3 lakhs. Asset now books liye 5 lakhs na. That 5 lakhs alone increased by 1 lakh. So now asset account debit to revaluation reserve 1 lakh. This is method number 2. So if the question doesn't specifically ask you like, then you should give both the methods entry, my dear friends. If they ask you one specific, then you give the entry. This is revaluation. But somehow last exam the test pannadanaala will not have much huge relevance. But on the replacement portion, no, that high relevance for this time. All of you? Okay. So this is treatment of revaluation profit or loss, my dear friends. Then in case of disposal, difference between net sale value and book value recognized as gain or loss in statement of P&L. Gain or loss in statement of P&L. Number 1, any balance left in the revaluation reserve should be transferred to general reserve. This also you should be knowing. Once an asset is sold, any balance left in the revaluation reserve should be transferred to general reserve. This also you should be knowing, my dear friends. On the disposal, the difference between net sale value and book value recognizes gain or loss in statement of P&L. Revaluation reserve, in the past you have created, that what to do? Transfer to general. So don't transfer to P&L. Suppose you get some loss, can I adjust the loss against revaluation reserve? No. So gain or loss, so strictly in SOPL, whatever you have revaluation reserve, directly will go to general reserve. In the point you should be knowing, all of you. Depreciation related, my dear friends, what we should do, depreciate is depreciable amount. That is cost minus residual value depreciated over the useful life. Now, every year when you find during review, if you find some change in residual value, change in useful life, if you find change in method of depreciation, all these changes should be affected prospectively by considering remaining depreciable amount and remaining useful life. Remaining depreciable amount, remaining useful life. Asset was having this much value, residual value this much, useful life. Later on, useful life has been re-estimated. What we should do? For example, cost of the asset 20 lakhs, residual value 4 lakhs, useful life 8 years. Useful life 8 years. In year 2 or at the end of year 2, residual value re-estimated as 7 years instead of 8 years. 7 years instead of 8 years. So this is at the end of year 2. You should not change any year 2 depreciation. It should affect only year 3 depreciation. Now question is asking you, what is the depreciation for year 3? What is the depreciation for year 3? What is the depreciation for year 3? Yes. Manishwari, Shruti கொஞ்சம் செக் பண்ணிக்கோங்க. இன்னொரு தடவை செக் பண்ணிக்கோங்க நம்பர்ஸ். ரிலாக்ஸ்டா. Okay. So, my dear friends, we are understanding depreciation. We need to calculate for year 3. No, for that we should know first of all carrying amount at the end of year 2. Carrying amount at the end of year 2. Because depreciation based on this remaining depreciable amount. No. So, which is 20 lakhs is the cost. Minus depreciation will be 20 lakhs minus 4 lakhs divided by 8 into 2. So, like that we find carrying amount is 16 lakhs. Correct? We are deducting 2 years depreciation. So, at the beginning of 3rd year you have carrying amount 16 lakhs. Now, depreciation for year 3. So, we normally would have taken that remaining life for 6 years. Now, we are understanding remaining life is not 6, remaining life is 5. Remaining life is 5. So, 16 lakhs minus the residual value. Residual value is what? 4 lakhs. Residual value 4 lakhs divided by 5 years. So, it is 2,40,000 will be the depreciation for 3rd year onwards. 3rd year onwards. Hope you are understanding this, all of you. So it is 16 lakhs minus 4 lakhs divided by 5. So 2.4 lakhs will be the depreciation. So like this, depreciation should be calculated, my dear friends. Okay. Similarly, depreciation will be calculated even if the fair value is more than the carrying amount. But if residual value is more than the carrying amount, then there is no need for charging depreciation. In the factors, remember panikonga, sometimes some case study question it can come. Understood? Then change in that liability, adala not required. Dismantling liability, that are all not required. This much only you should be knowing about AS10, my dear friends. About with that, we are concluding on to AS10 also. We have how many standards now? 1, 2, 3. 3 standards. Okay, so AS 1, 2, 3. If there are doubts, please do ask, my dear friends. So proceeding to the next standard, AS3. Cash flow statement. Cash flow statement based group 1 la you are going to have definitely a very good question, is what my mind says. 12 mark or 15 mark question, 10 mark question are going to come under indirect method. Apart from that, still they can ask you general classification of cash flows. So you should know various operating cash flows, my dear friends. Investing cash flow, financing cash flow. Operating, investing, financing cash flows. So my dear friends, purchase of asset, purchase, sale of long-term asset including investment, interest, dividend received. This is what primarily investing cash flows. Similarly, my dear friends, financing cash flow, similarly, if they give tax relating to the dividend, tax relating to this interest and all, that also should be part of investing cash flow. When the tax can be identified to a particular activity, then the tax is that particular activity only. So financing cash flow, so issue of share capital, bonds, debentures, redemption of same, loans, borrowings, repayment, interest, dividend paid, But special issue enna, my dear friends, some expenses relating to raising of finance will also be considered as financing activity. Some expenses you paid, brokerage for getting a loan. You paid brokerage for getting a loan. What activity is this? You should not take it as operating activity. That is also financing activity. Underwriting commission paid. Financing activity. Like that, few things will come. All of you. Okay. Operating activity, other than these two, whenever you have confusions, then naturally it will get in the residual category. Operating activity, my dear friends. So you need to check whether it's investing or financing. Illana automatically it goes to operating activity, my dear friends. All of you. Another component you should be understanding is that not pakka presentation of cash flow and all. So you should know cash and cash equivalents. Adala cash we have, cash equivalent we have. As far as cash is concerned, it is cash in hand and cash at bank. And when we say cash at bank, it consider only the demand deposits. We should not consider term deposits. So FD is part of cash balance and keta illa. FD is never cash and cash equivalent ana. Sometimes the FD can be cash and cash equivalents, but not cash. Cash is a bank included, but FD is not part of this particular cash component. It is part of cash equivalent, my dear friends. All of you. So thereby, Adu and FD should have a maturity of 3 months or less. What is cash equivalent? Short-term investments. That can be easily convertible into cash. And does not have risk of change in value. So all these years, the simple information about marketable securities, we used to treat this as cash equivalent. Henceforth, no. Only if the question says marketable securities, no risk of change in value, like that given, then marketable securities you can assume as short-term investments. But the risk of change in value you cannot assume. So generally we take this as investing cash flow only. Marketable securities, we treat this only as investing cash flow. Understood? Suppose if the question says marketable securities of no risk in change in value, then we will say cash and cash equivalent. Cash and cash equivalent. Similarly, bank FD, bank OD. Bank OD is not cash and cash equivalent negative balance and all. It should be taken as a financing cash flow. Financing cash flow. All of you. Like that, AS3 la maximum expected is this classification of cash flows. Presentation, if they ask, that anyway we have covered through the chapter, my dear friends, cash flow statement. So this is what you should be understanding. So TDS relating to the respective activity should be shown as the respective item only is what we should be treating. Understood? Super. So that like that you are understanding, my dear friends. So proceeding further. Srinath is asking a question. It's a preliminary expense paid na, it's a formation expenses. It's only part of investing cash flow. It's part of investing cash flow. Preliminary expense write off na is a different thing. Preliminary expense write off na, then it is an elimination from operating cash flow. Elimination from operating cash flow, but primarily it is associated with formation cost of the company. It is formation cost of the company is what we should consider. So underwriting commission already told financing cash flow or underwriting commission. So as already conveyed point. So with this we are completing AS3 also, my dear friends. Rohit B is asking, sir, preference dividend when equity dividend percentage given. அப்படின்னு நீங்க கேக்குறீங்க, எனக்கு புரியல. Maybe a bigger problem you are asking. I already told you many times. So you do not take that, my dear friend, as this preference dividend adjustment and all cash flow statement as a bigger chapter. Only when the question is mentioning you about the preference dividend, then you should consider. Otherwise, dividend payable always it's consisting of the equity and preference dividend. So that is how you should be taking. You don't have the right to consider any adjustment separately for preference dividend. Yes. So two standards, my dear friends. AS2 valuation of inventories. Valuation of inventories. From the valuation of inventories point, my dear friends, inventory should be valued by a simple principle. It is cost or NRV, whichever is lower. Lower of cost and NRV is the basis for valuation of inventory. Cost means, my dear friends, cost of purchase, cost of conversion, then other cost. Cost of purchase na primarily we understand as the material cost. Conversion, my dear friends, consists of labor cost and overheads. Overhead consists of variable overheads and fixed overheads. Idala in the fixed overheads treatment you should be definitely be aware of. So remember the treatment of fixed overheads. So what is the treatment of fixed overheads? If the actual production is equal to the budgeted production or less than the budgeted production, then the allocation will be based on dash production. Allocation to the inventories cost will be based upon fixed overhead. Some amount is incurred. Now production numbers will decide how much should be charged to closing stock. How much should be charged to closing stock? Out of this much cost, what should be added to closing stock? So it will be based on budgeted. It will be based on budgeted production. But if actual production is greater than the normal capacity or normal production, budgeted production, then allocation to the closing stock should be based upon actual production. This point you should remember, my dear friends, all of you. Okay, then the other principle application only, as far as NRV is concerned, it is estimated sale value minus estimated cost of completion, generally applicable if the goods are semi-finished, work in progress. Finished goods are not, this will not be applicable. It is only estimated selling expenses, estimated selling expenses. This is what we should consider, my dear friends, all of you. Okay, upon this basis of valuation you should consider for the AS2 valuation, my dear friends. You know the FIFO weighted average application. So FIFO means the first in first out based issue. So the stock represent latest purchases value. Stock represent latest purchases value. You know application of weighted average, guys. Hope this is not a time where I can solve problems onto FIFO or weighted average. And similarly, if they give different products, my dear friends, and they give cost to price and NRV for different products, then if the question is asking you find the value of stock by applying item by item approach, aggregate approach. So you know item by item, now or item separately you should be finding out cost or NRV. Aggregate approach na total cost, total NRV you should be taking. So two methods la you should be giving answer. Two methods la you should be giving the answer. So that is another concept there. Then one concept was, my dear friends, the raw material valuation. Raw material valuation, my dear friends. So what is that now? Raw material ke first NRV is equal to replacement cost. NRV is equal to replacement cost. This okay. I am not telling you should value it NRV. So raw material ko this principle of cost or NRV, whichever is lower, is applicable. Yes, applicable. Only thing is NRV is equal to replacement cost. Usually NRV means if you sell how much you will get. That's NRV. Raw material ku mattum if I buy how much I have to pay. That's NRV for raw material. I have raw material. Today if I want to buy more na, how much I have to pay is the NRV for raw material. Sorry. Principle applicable. And the principle is applicable. Cost or NRV whichever is lower applicable only in a partial scenario. Which scenario na? If the finished goods are getting valued at cost, if the finished goods are getting valued at cost, then raw materials will always be valued at cost, even though its NRV is less. Even though its NRV is less. Even though NRV of raw material is less, it doesn't matter if the finished goods are valued at cost. Why? Because in the raw material already purchased for 100. Today in the market it is 120. Appo idoda NRV is 120. I'm sorry, 120 illa. NRV is 80. But already purchased for 100, intended to be used for finished goods. Finished goods valued at cost means finished goods can recover entire 100 already used. Entire 100 already used. Appo through business you can recover 100 or more than that na. There is no need for valuing this at 80. Abdine logic. Anyway, so thereby for raw material also we will apply the principle of cost or NR whichever is less. That principle we will apply not in a independent scenarios. It will be checked with finished goods valuation. If the finished goods has been valued at NRV na, then raw material we should apply the principle cost or NRV whichever is lower. Appo in the classroom we tell you one thing, raw material will always be valued at cost except ஒரே scenario. என்ன scenario na? NRV of finished goods is less than cost price of finished goods and NRV of raw material is less than cost price of raw material. That time alone raw material is valued at NRV, that is replacement cost. Otherwise always at cost only. Like that we have discussed one concept. Hope you remember that, all of you. So ஒரு ஆர்டிபியில் ஒரு கொஸ்டின் இந்த மாதிரி ஒரு டிஸ்டிங் கொஸ்டின்லாம் கேட்குறாங்கப்பா. ஸோ ஒரு ஜே லிமிட்டட் total closing stock valued at cost, total closing stock valued at cost. It was given as, my dear friends, as 4,50,000. It included certain quotes. So 100 quotes. So on the quotes oda cost price வந்து it is 2,200. Cost price is 2,200. Then selling price is 4,000. Now estimated normal selling price. Estimated selling price due to damage. நம்ம ஒண்ணே ஆடி ஆஃபர்ல 50% பண்ணி will be selling this. So slight damage, nobody can detect this. So it was expected to be sold only at 50%. Seri. Similarly, they also have certain shirts. Cost price 50,000. NRV 55,000. Estimated selling commission. Estimated selling commission 10% given. Now, what should be the value of stock as per AS2? Abhinu question. So, once again, sir, facts is sir. J Limited closing stock cost 4,50,000. So, includes 100 quote costing 2,200. NRV, I mean net selling price 4,000. Estimated selling price due to damage is only 50% of this. Shirts cost price 50,000, NRV 55, estimated selling commission 10%. What will be the value of closing stock as per AS2? Like this question. Appo, can you tell me what is the value of closing stock? In the coat oda value, shirts oda value already included in the 4,50,000. First of all, shirts oda value, coats oda value has been already included in the 4,50,000. All of you? Okay. Only thing is it is valued fully at cost. Whatever included here has been included everything at cost. Cost is included information. Then they are giving information about coat and information about shirts. This is the closing stock. This includes these items. There is some more items also. So you don't search for the breakup is not equal to 4,50,000. Check panadinga. So now tell me what it should be the value of closing stock as per AS2. What should be the value of closing stock as per AS2? Hope you understood the facts here. To understand the facts, ரொம்ப கஷ்டமா போச்சு. So some of you still not understanding it. J Limited total closing stock is given as 4,50,000. Now 4,50,000 le coat odadum shirts odadum included or we should include ana, it's already included. It's already included. 2,49,000 final சொல்றீங்களே எனக்கு ஏனே புரியல. இது the closing stock 4,50,000 coat, shirt, pant, வேற விஷயங்கள்லாம் சேர்த்து 4,50,000 closing stock பா. அதில் coat ordu shirts ordu some information given. அதை வச்சு now will you continue the answer as 4,50,000 or some other value? That's all. You don't now value only coat and shirts. Some of them are valuing only coat and shirts. So you don't value this only coat and shirt. Exactly, very good Shruti, super. Yes Nirmali, very good. Yes Darshan, super. So what we are understanding is as far as coat is concerned, cost price is 100 into 2,200, it is 2,20,000. NRV is 100 into 50% of selling price, it is 2 lakhs. Appo it should be valued at 2 lakhs. It should be valued at 2 lakhs, which means in the total closing stock already given in the question, 2,20,000 is included. They have valued all the goods at cost price, all of you. But we know it should have been valued at 2 lakhs, which means so because due to the quote valuation at NRV, stock should be reduced by 20,000, or given value of stock in the question should be reduced by 20,000. Like that, now you should give the impact on the given information. Hope you are following this. They are not asking you to value coat and shirt. They are asking you what should be the closing stock of this company. Hope you are understanding. So similarly, shirts when you take cost, it is 50,000. NRV 55,000. When I read also, I committed mistake. Like I made a mistake. They give selling expenses 10%, 5,500. If I reduce, I got 49,500. Oh, NRV is less. So thereby, or 500 rupees less is there. No, that also should be considered. but then only you should careful. Examiner எவ்வளோ sadistic examiner பாரு. So they have given NRV 55,000. questionல NRV 55,000. அந்த NRVல selling expenses already considered. NRVல selling expense of 10% already accounted. நம்மள வேணும்ட்டே தப்பு பண்ண வைக்க அந்த expenses information given. இது irrelevant information. You need not do any plus or minus. 2 to 5 பசியில அந்த ஸ்டாண்டர்ட்ஸை போடும்போது நிச்சயம் lack of concentration will be available. இந்த மாதிரி I pray that no such people should exist. But in the மாதிரி NRV was given, my dear friends. Okay, அப்போ you compare. So cost 50, NRV 55. Don't do any adjustment because already it is at NRV. They didn't give estimated sale price. It's already NRV. So it is at 50,000. அப்போ ஷர்ட்டுக்கு no change required. கோட்டுக்கு 20,000 reduction should happen. So thereby, so closing stock has to be 4,50,000 as given in the question at cost to price minus reduction required. Reduction required. So it is 4,30,000. Hope you are understanding this, all of you. Okay, sir, where is this example, sir? It is there in the RTP pa. So last two RTP la in the question is there. So either last one or before one RTP la irukku. So notes la edirpaakadinga. Okay, so don't worry. So it is there in the RTP. Okay, only thing is that already NRV given, adala in the expense given, you'll be tempted to deduct, not to deduct. I am telling all of you. This AS2, my dear friends. AS1, disclosure of accounting policies. My dear friends, the term accounting, significant policy to be disclosed. Significant accounting policy to be disclosed. Significant accounting policy should be disclosed. Similarly, when you accounting policy na, it is accounting principles, all principles and methods. Principles and methods na policy. That's all. Then for disclosure purpose, we classify policy into for others. For if it is already applied, GCA, going concern, consistency, accrual, I am following na, I need not disclose. If followed, no disclosure. If not followed, the fact, reason should be disclosed. The fact, reason and also the effect should be disclosed. Going concern follow pannala, seri, why, and the reason, and what is the overall effect, where and all you made changes, all those things should be disclosed, my dear friends, all of you. Seri. Similarly, as far as consistency is concerned, if you are following last year policy as it is in the current year, then no problem. If you have changed any policy na, then that has to be disclosed, separately has to be disclosed, all of you. Then accrual basis, you understand. Any other accounting policy, whatever you followed, you should be disclosing. Whatever you are not followed, there is no need for disclosure. Understood? Then selection of accounting policy la, selection la, primary factor is true and fair view. That based on no testing. But secondary factor, prudence, materiality, substance over form. So sometimes by considering the materiality level, you can select some policy which you feel like it is actually a mistake. For example, I told you capital expenditure charged in P&L. Oh, you're wrong. But my policy is like this. At this much level, we always charge in P&L. Our worth of assets are 1,000 crores. Appo 25,000 any capex made nalum, even though useful for 2-3 years, we will put into P&L. Is our accounting policy. So by considering materiality level, it can be an acceptable accounting policy. It is correct only. You should not mention that is wrong policy. So materiality level will be considered. Substance over form, higher purchase. Similarly, property sale not registered this year. So by looking into substance, we feel that everything is over, legal formality is pending. So thereby it can be accounted as sale. So that is actually a combination of this standard, that is AS1 and AS4. AS1 and AS4, but sometimes AS1 group only it will be tested. AS4 in events occurring after the balance sheet date. So registration completed next year andalum, it can be accounted as sale of this year if all other formality except registration completed. Then some cases they will tell so and so changes happen, so give disclosure na and the facts அப்படியே you disclose pa. That's all. Facts you disclose by putting a note as per AS1, all of you. So there won't be any other complication you have in AS1, my dear friends. AS1 question கொடுத்தா ரொம்ப பெருசா இருக்கிற மாதிரி இருக்கும், கன்ஃபியூசிங்கா இருக்கிற மாதிரி இருக்கும். Clear mind you read it, then you will feel like, oh, this disclosure is made. So on the facts you analyze and you make an appropriate disclosure. Understood? So that's all from an AS1 perspective, my dear friends. Accounting policy should be disclosed at a single place and not an excuse for misapplication. Super Ramachandra, fantastic. எல்லா பாயிண்ட்ஸும் ரிமெம்பர் பண்ணியிருக்கீங்க. ஸோ அக்கௌண்டிங் பாலிசி எல்லாமே should be disclosed at single place. அதுக்கப்புறம் by you following wrong policy, if you disclose it, it will not become a correct policy அப்படின்ற அது examination questions அது வராதுன்றதுனால தான் we are not discussing every point. So with that we are concluding on to the accounting standard revision, my dear friends. All the standards which we did for 40 hours or 2.5 hours to the extent possible we have compressed. Last day it was this chapters. இப்போ எக்ஸாமுக்கு போனீங்கன்னா so few things you should go before எல்லாம் நான் சொல்லி இதெல்லாம் நான் சொல்ல முடியாது, சொல்லவும் மாட்டேன். Number 1. Number 2, you should carry stationaries, all these stuff அப்படின்றதும் I don't want to tell you. I don't want to treat you like a very small kid. So only thing is இது ரெயின் டைம் கொஞ்சம் சேஃப்டி மெஷர்ஸ் எடுத்துக்கோங்க. ஆல் ஃபார்ம்ஸ் ஆஃப் சேஃப்டி மெஷர்ஸ் ரெயின் டைம். ஸோ தேர் வேர் டைம்ஸ் லைக் திடீர்னு ஒரு டிராஃபிக் உருவாகி டென்ஷன் ஆகிற சான்சஸ் எல்லாம் இருக்குது. ஸோ ரொம்ப நார்மல் பீரியட் இல்லை. ஸோ இன்னைக்கு ப்ரெடிக்ஷனும் சரி, நாளைக்கு ப்ரெடிக்ஷனும் சரி, வெதர் ப்ரெடிக்ஷன் டக்குன்னு பயங்கரமாக ரெயின் பயங்கர ஃப்ளட்டிங்காக இருந்து டிராஃபிக் ஆகி கன்ஜஸ்டடாகி அதனால் அந்த டிரான்ஸ்போர்ட்லாம் பக்காவாக ப்ரீஃபிக்ஸ் பண்ணிவிட்டு ஒரு just be vigilant about what is happening outside. Okay, so அது ஒன்று. Number 2, after going to exam ரெண்டு எக்ஸ்ட்ரீம்ஸாக இருக்காதீங்க. ஒன்று டூ நர்வஸாக யாரோடையும் பேசாமல் ரொம்ப இறுக்கமாகவும் இருக்காதீங்க. டோன்ட் பி லைக் தட். சேம் வே ஃப்ரெண்ட்ஸை பார்த்தோன்னா அங்கே ஒரு 1 hour பிஃபோர் போய் ஜாலியாக நம்ம ரிலாக்ஸ் ஆகலான்னு ரொம்ப இதுவும் பேசிடாதீங்க. ஃபோக்கஸ் டீவியேஷன்ஸும் பயங்கரமாக போகும். ஸோ அதுவும் பண்ண வேண்டாம். ஸோ ஒரு பேலன்ஸ்டாக இருக்க ட்ரை பண்ணுங்கள். ஓகே, ஸோ ஒரு ஃப்ரெண்டை பார்த்தா சிரிங்க, ஸ்மைல் பண்ணுங்கள். ஒரு மாதிரி ரொம்ப இறுக்கமாக இருக்காதீங்க. இன்னும் பயங்கர ஹார்டாக என்னமோ அப்படியே எப்போ வேணாலும் நம்ம நெஞ்சு வெடிச்சிற மாதிரியான ஒரு ஃபீலோட இருக்காதீங்க. அட் த சேம் டைம் ரொம்ப ஜாலியாகவே என்டர்டெயின்மெண்ட் பண்ணாதீங்க. எக்ஸ்டர்னல் டாக்கே வேண்டாம். மேபி ஃப்ரெண்ட்ஸோட படிச்சிருக்கேன் அவ்வளோதான், வேறு எந்த அந்த சாப்டர் இந்த சாப்டர் எந்த டிஸ்கஷனுமே வேண்டாம். ஓகே, மேபி கொஞ்சம் லைட் பண்ண ஒரு 1 minute காமெடி 30 seconds அப்படின்னு லைட்டாக ஒரு ஹாய் அண்ட் லைட் பண்ணிக்கலாம். நம்ம லைட்டாக போகணுமே தவிர ரொம்ப ஓவராக ஃபன் மாதிரி உள்ளே போகக்கூடாது. வரதா பார்த்துக்கலாமாமே அப்படின்ற மாதிரி போகக்கூடாது. ஸோ லெட்ஸ் கெட் இன் டு த எக்ஸாமினேஷன் ஹால் வித் லிட்டில் பிட் ஆஃப் ஃபோக்கஸ், பட் நாட் டூ ஹார்டாக வி ஷுட் நாட் பி கோயிங். ஓகே, நம்பர் 1. எக்ஸாமினேஷன் ஹாலில் பேப்பர் வரும், நல்லா படிங்க. கொஸ்டின் பேப்பர் நான் படித்தா எனக்கு பயம் வரும்னு படிக்காமல் விட்டுறாதீங்க. ரீட் த என்டையர் கொஸ்டின் பேப்பர். ஆல் செலக்ட் த கொஸ்டின் விச் யூ நோ தி பெஸ்ட். அக்கௌண்டிங் சேனல் தெரிஞ்சால் அக்கௌண்டிங் சேனலில் ஆரம்பிங்க. இல்லைன்னா எந்த கொஸ்டின் ரொம்ப பெஸ்ட்டாக தெரியும்னு நம்புறீங்களோ அதை சால்வ் பண்ணுங்க. சப்போஸ் இன் ஸ்பைட் ஆஃப் ஆல் தீஸ் ஹார்ட் ஒர்க், question number 1 I already told many times, question number 1, question number 2 questions consecutive we feel that பயங்கர difficult, அது unprepared அப்படினாலும் don't lose heart, don't lose hope. There will be different questions which can fetch you marks towards the end. So immediately வந்து first 3-4 wickets down இனிமே நான் வந்து தோத்துருவேன் அப்படின்ற மாதிரி மைண்ட் செட்லயே வரக்கூடாது. So you need to really be very calm throughout the 3 hours. டக்குன்னு பேனிக்காவோ ரியாக்ஷன்லையோ ஜட்ஜ்மெண்ட்டை பாஸ் பண்ணாதீங்க. சே இந்த சாப்டர் வரும்னு எதிர்பார்த்து அதில் கொஸ்டின் பேப்பர் ரீட் பண்ணதுக்கு அப்புறம் ஐ எக்ஸ்பெக்டட் வி ப்ரெடிக்டட் so much things, no, so many things we predicted, no, please like even if it is okay, it is our human to expect many things, but if it is not coming also, don't panic, don't make judgment on yourself. Definitely some other way, when you fight and you keep think and calm, answers will flow, my dear friends, all of you. So thereby அனாவசியமான வரியை கிரியேட் பண்ணாதீங்க. போச்சு, சரி இது வரும்னு எதிர்பார்த்தா வரல, அது வரும்னு எதிர்பார்த்தா அந்த ஆள் வேற 2 days ரிவிஷன் கிளாஸ் அது வரும்னு சொன்னாரு வரல, அப்படின்ற மாதிரி ஒரு நெகட்டிவ் ஃப்ரேமுக்கே போகாதீங்க. ஸோ ஜஸ்ட் நல்ல டீப் ப்ரீத் எடுத்துக்கோங்க. ஸோ ஒரு கொஞ்சமாக தண்ணி குடிங்க, இதுனா ரெயின் டைம், ஸோ ப்ராப்ளம். ஸோ ஓகே, அதனால் ஜாக்கிரதையாக இருங்க. ஸோ அட் த சேம் டைம் எந்த ஜட்ஜ்மெண்ட்டும் பாஸ் பண்ணிடாதீங்க. கொஸ்டின் பேப்பரை பற்றி எந்த ஜட்ஜ்மெண்ட்டும் 3 hours முடிகிற வரை பாஸ் பண்ண வேண்டாம். எனக்கு அட்டென்ட் பண்ண முடியும், யோசிச்சா வரும் அப்படின்ட்டு. இனிஷியலாக ஸ்ட்ரக் ஆகலாம், அப்புறம் யோசிச்சா வரும் அப்படின்ற கான்ஃபிடன்ஸ் இஸ் வெரி 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 இம்பார்ட்டன்ட் மை டியர் ஃப்ரெண்ட்ஸ். ஸோ ஃபர்ஸ்ட் கொஸ்டின், செகண்ட் கொஸ்டின், தேர்ட் கொஸ்டின் தரல, 4th 5th 6th நிச்சயம் தெரியும். அப்புறம் மறுபடியும் செகண்டுக்கு வரும்போது இதுவா தெரியும், அப்போ மறந்து போய் இப்போ வரும். ஸோ அப்படி டைம் ஃப்ரேமாக கூட வரும். ஃபர்ஸ்ட் ஹவரில் வராது, தேர்ட் ஹவரில் வரும். பயங்கர ஃபாஸ்ட்டாக யோசிக்கும் போது வரும். அண்டர்ஸ்டூடா? ஒரு போலரை ஃபர்ஸ்ட் ஓவரில் பார்க்கும்போது கஷ்டமாக இருக்கும். மேபி அந்த 4th ஸ்டாக் ஓவரில் வரும்போது புவனேஸ்வர் குமாரை போட்டு தள்ளிடலாம், சாத்திடலாம். அந்த மாதிரி டிஃப்ரெண்ட் செனாரியோஸ் தான் மை டியர் ஃப்ரெண்ட்ஸ். ஓகே, ஸோ ஒன்லி திங் இஸ் யூ நீட் டு மெயின்டைன் தட் காம்னஸ், கான்ஃபிடன்ஸ் லெவல், not creating negative vibes around you. Some students collecting extra paper should never be disturbing. அங்கே இருக்கிற small things like ஃபேன் சுத்துது இல்லை சுத்தலை, எதுவுமே டிஸ்டர்ப் உங்களை ஆகக்கூடாது. ஒரு நல்ல ஒரு பெரிய யோகி மாதிரி அப்படியே வந்து ஒரு சன்னியாசி மாதிரி அங்கே உள்ள போய் எக்ஸாம் எழுதணும். 3 hours ஃபைட் பண்ணணும். 100 marks அட்டெம்ப்ட் இஸ் மந்த்ரா, அது மஸ்ட்டு. என்கிட்ட எவனாவது ஃபோன் பண்ணி நான் 5 mark விட்டேன் 2 mark விட்டேன்னா நான் உங்களை பார்க்கும்போது அதை ஞாபகம் வச்சு தலையிலே கொட்டுவேன். ஸோ தேர்பை see to that அந்த 100 marks எழுதணும். உங்களுக்கு தெரியுது தெரியலை, டைம் இருந்தது இல்லை அப்படின்னு ரீசனே இருக்கக்கூடாது. attempt 100 marks is must mandatory. ஸோ என்கிட்ட வந்து என்னோட ஸ்டூடெண்ட்ஸ் இந்த மாதிரி சொல்கிறது I don't like it. ஸோ attempt is must. Everybody have knowledge about everything. So you should make at least 2-3 lines, ஒரு class 5 marks 2-3 lines அப்படியே எழுதிட்டு தான் அந்த பேப்பர் அவர் பிடுங்கணும். அந்த மாதிரி எழுதாமல் வரக்கூடாது. 100 mark எழுதுறது மஸ்ட்டு. 2 லைன் ஆகுது, அதில் 1/2 mark 1 mark சேஞ்ச் யோர் கேரியர். அதனால் லாஸ்ட் மினிட் வரை பயங்கரமாக ஃபைட் பண்ணணும். ஸோ டோன்ட் கிவ் அப் மை டியர் ஃப்ரெண்ட்ஸ், ஆல் ஆஃப் யூ. இது இந்த எக்ஸாம்னு கிடையாது, த்ரூ அவுட் ஆல் த 8 எக்ஸாமினேஷன் யூ ஷுட் ஃபாலோ த சேம் ஸ்பிரிட். ஸோ டோன்ட் டிஸ்கஸ் த ஆன்சர்ஸ் ஆஃப்டர் த எக்ஸாம். இதெல்லாம் யூ வில் பி நோயிங், இதெல்லாம் உங்களுக்கே தெரியும். ஸோ எனக்கு என்னென்னா காமாக இருக்கணும், கான்ஃபிடென்ஸாக இருக்கணும். வாட் ஐ ப்ராக்டிஸ் அலோன் ஐ கேன் ப்ரீச் யூ. ஐ ஒன்ட் ப்ரீச் எனிதிங் பியாண்ட் தட் மை டியர் ஃப்ரெண்ட்ஸ், ஆல் ஆஃப் யூ. ஸோ அப்போ லைட்டாக ரொம்ப டென்ஷன் ஆகாமல் லைட்டாக தண்ணி குடிங்க, டீப் ப்ரீத்திங் எடுத்துக்கோங்க. நீங்கள் அந்த ஸ்டேஜில் பேசணும் சொல்லுவாங்க டேக் டீப் ப்ரீத்துன்னு, அந்த மாதிரி நல்லா டீப் ப்ரீத் எடுத்து மறுபடியும் நல்லா கொஸ்டினை பாருங்கள், டக்குன்னு அது ஆன்சர் கிடைக்கும். ஓகே, ஸோ டெஃபினட்டாக யூ ஆல் வில் டூ வெரி வெரி வெல். நிறைய ஒர்க்கிங் நோட்ஸ், நிறைய அசம்ஷன்ஸை நிறையா ப்ரொவைட் பண்ணுங்கள். லாஸ்ட் 1 hour ஆன உடனே ரிவ்யூ பண்ணுங்க, இன்னும் ஹவு மச் மோர் மார்க்ஸ், அதுக்கப்புறம் ஃபாஸ்ட் அப்படியே இன்க்ரீஸ் பண்ணிகிட்டே இருக்கணும். எலிஜிபிலிட்டி கொஞ்சம் கம்மியாக இருந்தாலும் பரவாயில்ல, இட்ஸ் ஓகே. ஆனால் அட்டெம்ப்ட் இஸ் மஸ்ட் மை டியர் ஃப்ரெண்ட்ஸ். ஓகே, ஆல் தி பெஸ்ட். நிறைய ஹவர்ஸ் பண்ணியிருக்கோம், ரிவிஷன் கிளாஸ்லாம் பண்ணியிருக்கோம், நீங்களும் நிறைய எஃபர்ட்ஸ் போட்டு படிச்சிருக்கீங்க, எல்லாரும் பாஸ் பண்ணிடுவீங்க. ஸோ ஹார்ட்டி விஷஸ். ஸோ நல்லா பண்ணுவீங்க. ஓகே, நாளைக்கு எனக்கு தான் டென்ஷன் 2 to 5. ஸோ நல்லா பண்ணுங்க. ஆல் தி பெஸ்ட். ஹார்ட்டி விஷஸ். இதுக்கு மேலே என்ன சொல்கிறதுன்னு தெரியல. பாய். டவுட்ஸ் இருந்தால் மட்டும் கேளுங்க. அப்சல்யூட்லி டோன்ட் வரி அபவுட் த ரிசல்ட்ஸ் ஆல்சோ. நம்ம எஃபர்ட்ஸு அட்டெம்ப்ட் மஸ்ட். தேங்க்யூ, ஆல் தி பெஸ்ட். இன்னைக்கு படிக்கும்போதோ நாளைக்கு படிக்கும்போது டவுட்ஸ் இருந்ததுன்னா ஃபோனில் கான்டாக்ட் பண்ணலாம், வாட்ஸ்அப்பில் நம்பர் வச்சுருப்பீங்களா, ஏதாவது இதில் இது பண்ணுங்கள். Any order, I already told you. Question number 5B can be answered. Only thing is, question number center of the page la எழுதுங்க. Question number 5B எழுதுனீங்கன்னா center of the page. இங்க போய் மூலையில 5B la எழுதாதீங்க. So you write in the center of the page question number. Okay. Any order you can write, no problem. Last question, first question, last, no problem. Only thing is, நல்லா clear பெரிய லெட்டர்ல question number 5B, question number 5C அப்படின்னு center of the page la you write. டைம் இல்லாத போது ஷார்ட் ஃபார்ம்ஸ் இஸ் ஓகே. சூரியநாராயண், dividend should be calculated on paid up capital my dear friends. Face value அப்படின்னு சொல்றது should never be on the market price, but company ஓட வியூ பாயிண்ட்ல it should be calculated only on paid up value. ஓகே, ரிட்டர்மிஷன் ப்ரிஃபரன்ஸ் ஷேர்னா அது சுமன் சாரை கொஞ்சம் காண்டாக்ட் பண்ணிக்கோங்களேன். ஏன்னா நான் ரிவைஸ் பண்ணலை. எஸ் ரோஹித், ஆல் தி பெஸ்ட். Okay, Shanmugam. Bye. Okay, so we'll conclude the session. Bye. Hearty wishes. Thank you. All the best. So admin lecture close பண்ணு. See, you make client, you don't make client, that all these things, no problem, pa. So again, it all depends upon how crucial the time is. Lines can be made by without scale and pencil. No, I'm getting angry, Anil Geeta. All the best. Close பண்ணிடலாம். தண்ணிக்கினே வந்துச்சா?